Good morning. We are a bit late because of technical difficulties. The chairman is running late and asked me to start this at 10, and due to technical difficulties, it is virtually 10. So, HB 297, non-germane amendment, and I'd like to hear from insurance, yes, my friend, Commissioner DJ, to explain it until John Hunt gets here. So you know all the good stuff. So let's hear what's going on with this non-germane amendment. Wow. I get the holy trio. Thanks,
That's a
DJ.
very dangerous assignment you've given me, Mr. Chairman, because it sounds like you want me to talk as long as I need to stall for Representative Hunt, and I can certainly talk.
He and I talked already on the phone twice this morning, and he said this amendment is very important, and if anybody has any questions, you three are the ones to answer them.
We will certainly do our best. I'll tell you that, Mr. Chairman. So if I might, DJ Betancourt, as you know, Commissioner of the New Hampshire Insurance Department, I'm joined here at the table by Christian Citarella, who is our PNC actuary, and Emily Doherty, who is our PNC legal counsel. I want to go a step further beyond just introducing the two individuals here to either side of me. They have done incredible hard work in designing the program that we're going to talk about this morning. They have done a lot of research. They've thought through a lot of things. We've gone through thousands of drafts. They've done really good work here. I'm incredibly grateful for the effort that they've put into this project, a project that I strongly believe in, and I strongly believe in it because I think it is going to be able to help the people of this state be able to afford their home insurance premiums. So very quickly, why are you seeing this before you as a non-germane amendment? So when we made the decision as a department to bring this proposal forward, because there is a budgetary impact, it made sense to me to include it as part of the department's proposed budget as an item within House Bill 2. We actually had to make that decision back in the late summer, early fall. The elections took place, legislative leadership was selected, and so we had a meeting with the leadership in both the House and Senate, and I basically asked them how they wanted us to approach this particular program. I explained to them why I thought it was an appropriate House Bill 2 item, but I said, we will engage this process however you would like. And the two pieces of feedback that I got were, would like to see as much detail behind this program as possible in the statute. So don't go looking for some, broad authority around a framework in statute via the rules process. Rather, put as much detail into the proposal itself. And then if there needs to be rulemaking later, that's fine. But we want to make sure that the legislature has an appropriate understanding of exactly what this program is and exactly how it will work. So that's why the amendment before you is a bit meaty. And the second thing the leadership instructed us to do was to take this proposal through the policy committees to have it appropriately vetted. And so here we are in front of the most important policy committee in the House. So in any event, I'm pleased to present to you this morning our proposal for the Granite State Home Mitigation and Resiliency Program. The slide deck in front of you, I've really tried to keep this fundamental and simple, and then we can go into as much detail based on the questions that you have as you would like. So very, very simply, what is the problem? As I've discussed with you before, homeowners are facing the burden of soaring insurance premiums and increases thereof, which has created a formidable barrier to people not only being able to maintain their home insurance coverages, but it's also hurt home ownership as well. Because as you know, it is a condition of a bank that you have homeowners insurance coverage in order for them to issue you a mortgage. So you have to have it. And so the problem again is the increasing premiums for homeowners insurance coverage, which again is putting strains on family budgets, individuals' budgets, is a barrier to home ownership. It's becoming a real problem. So what are the causes of the problem? Well, here again, we've talked a little bit about this before. Industry is working its way through what is currently a hard market. And so insurance companies are adopting a more selective approach to the risks that they are willing to underwrite. And again, that leaves consumers having to navigate an increasingly challenging environment where they either have to go to a new carrier that again is not offering them the same affordable premiums as they had before, or they're being non-renewed entirely within the admitted market. And so what they're having to do is go seek coverage in the surplus lines market, which is very, very costly for them. Some of the contributing factors to this, as again we've talked about before, are things like inflation, interest rates, the global supply chain disruption, litigation costs, and the large catastrophic weather events. Those are the component pieces of what's driving the current hard market that's contributing again to companies being a little bit more restrictive in their underwriting, and so therefore causing there to be not as much access to affordable coverage as existed before. So, not to blow too quickly through the presentation here, but I think I've described the problem, I've described the causes of the problem, and so here's where this program comes into play. Put very, very simply, what we would like to do is to create what essentially will be a dedicated fund. This is a proactive program. I want to be very clear about that. This is not a post-disaster type program. This is not anything that FEMA would do or HSEM here at the state level. This is a proactive program by which we would create a fund, and the fund would be, the dollars that would go into that fund would be the first $1 million that the department collects through the insurance premium tax would go into this fund, and then consumers would be able to apply into the fund on a first-come, first-served basis for grants upwards of $10,000 to be able to undertake some improvement of their home and property. The good news is we are not blazing a trail here. This is a program that has been undertaken, I believe, by, at this point, 7 or 8 states either have these programs currently in place or are in the process of standing them up. So we know the program works. We have some data as to the benefit the program has had in those states. That being said, I think the state that's had it the longest is Alabama, and Alabama's had it operational for only about 2 years. So we have some data, but not a ton of it, not because it doesn't exist, but because, again, the program has not been in existence long enough for us to be able to have a comprehensive set of data for you. But I think by virtue of the fact that you see a lot of members of industry here, both those who represent insurance carriers more broadly, and some of the carriers are represented individually here, who are here in support of this program, it is a testament to the fact that the program achieves the objectives and the outcomes that it is set out to achieve, which is to provide relief to homeowners for their homeowners insurance premiums. So of the data that we have in Alabama, over 60,000 homes have been fortified. They've issued 8,000 grants. In Louisiana, North Carolina, they've seen lower premiums and insurance discounts for proactive homeowners. And again, there's opportunities for savings both in terms of better positioning yourself in the underwriting to get a lower premium, but then there are also companies that offer a wider range of discounts up front if you are able to make certain improvements again to your home or property. So some of the more prominent projects that would be eligible for funding via this grant would be things like fortifying your roof, fortifying the exterior of your home. If there is foundational work that can be done to better protect the home from floods, that would be eligible. And one of the things that I think is going to have the most benefit to the most number of people is it makes eligible to things that could be done on the property itself to make the home safer. And the most prominent example of that is that large tree that is hanging over the house or has very large limbs that are hanging over the house. And because of the size of the tree and the height of the tree, it is expensive to get rid of it. And so therefore becomes cost prohibitive to a lot of people. So in this instance, the individual would be able to apply into the fund, would be able to get that tree taken down for $3,000, $3,500. And I cite that because that was what my folks had to pay to have a big old tree taken down in the front of their property. And for that fairly fairly inexpensive investment there, they're going to be way better positioned in underwriting, and they're going to be able to save on their premiums. So we're excited about that because, again, the $1 million is the $1 million. And we designed this program in a way where we're trying to have those dollars assist the greatest number of people. And so not every grant is going to be for the full 10,000. There will be a lot of other smaller projects that'll be well below that threshold that will be able to go out. And again, while it's small dollars for them, it's a huge impact in terms of their long-term affordability for coverage. So we're excited about those aspects of the program. So at this point, I'll just pause. Emily or Christian, is there anything at this point critical that I've missed before I get into some of the other highlights?
I think
No?
you've hit the.
My team says I've done well so far. I guess I'm on a roll. So in any event, we're trying to start modestly. It is $1 million, which is not obviously nothing. But again, we're going to find ways to make those dollars count. We have also heard over the course of the last year to year and a half a number of rumors coming from Washington. Granted, there are always rumors coming from Washington, but we are hearing that there is some interest in Congress to make some block granting available to states for these programs, either to start them or to be able to put more resources into currently existing programs. So we will have the $1 million of state funding that will go in every year, and you will see there that we have asked for any unspent dollars for, I think, the first 3 years, or was it 5? For the first 5 years to roll over. Simple reason being that it takes time for word of a program to get out to the public. So there'll be an educational aspect of this as well, and we're working very closely with the New Hampshire Home Builders Association to let their folks know that there will be opportunities for their contractors to be able to do more work, and that this is a program we hope they will have conversations with the individual consumers that they work with or interact with to let them know that this program is available for them to take advantage of. So we're hoping that we'll have a very aggressive grassroots communication strategy so that folks will know of the existence of this program, but we'll have the dollars that are unspent roll over for the first 5 years, and thereafter any unspent dollars will go right back into the general fund. So we'll be judicious with the money as well. But should the federal government make additional dollars available, because the program exists, we'll have a vehicle we'll be able to drop those dollars right into. And at that point, we'll come back and probably have a conversation with you about adjusting some of the eligibility criteria to be able to, again, impact even more, positively impact even more Granite Staters. But we're going to start modestly because the dollars are modest, and then we'll build out from there as the situation should dictate. Go ahead. Oh, I would also mention too, again, the idea being to have the dollars that we have in this program impact the people who are most in need of it. There is a means testing component to the program. Our means testing criteria is identical to the home heating assistance program,
Weatherization.
the weatherization program that the New Hampshire Department of Energy oversees and administers. We thought that adopting a model that worked well, that we knew worked well for one other state agency in a somewhat similar related subject matter would be beneficial. Certainly, we hope it's something that you're comfortable and familiar with. So we didn't reinvent the wheel. We went with something that had been tried, true, and tested. So again, there's means testing there. We want to make sure that we're targeting the people who really are the most in need and who would most benefit from having some support via this program. So that all being said, from my perspective, again, I think there are a number of wins and benefits to the program. First, obviously lowering people's homeowners insurance premiums. At worst, keeping them out of the surplus lines market. But also, not to be lost, is the fact that people are going to be living in safer homes. And that is a benefit in and of itself. And so people's homes, their properties will be safer for them, safer for their families, safer for any members of the public who may have reason to come onto that property. So that's good as well. And look, while I appreciate the fact that the home builders are busier than ever these days, this will also be an opportunity in the periods when they're a bit down or when that industry is not going quite as gangbusters. It'll be a good opportunity for them to have steady, consistent work to engage in and again help the consumers of the state. So Representative Hunt is here. I've done my job. I've filibustered just long enough for you to get here, Mr. Chairman. There's a lot to this program, obviously, and I know that this will go to work session. When it goes to work session, we are going to invite in a gentleman by the name of Brian Powell. Brian Powell used to be the Deputy Insurance Commissioner in the state of Alabama. He is actually the brain behind this program. Alabama was the first state to stand it up. I've engaged, therefore, in my favorite kind of work, which is R&D, rip off and duplicate. We've improved it, I think. We've taken a different approach than some of the other programs have, again, to try to address not just helping a home become certified under the IBHS standard, but again, for those who are not quite as ambitious to go in that direction, to be able to take on smaller projects that are still going to be very beneficial to them. Brian was poached from Alabama to work for the National Association of Insurance Commissioners, the NAIC, and his job all day, every day that he is there is to assist states in designing and bringing these programs online. He has been a tremendous asset to us as we were designing our program. I think we challenged some of his previously held beliefs about how some of this can work. I think we've broadened his horizons, and the result of that is we've been approached by 3 other states who have said, we understand that you're looking at this in a pretty interesting way, in an innovative way, would like to understand what you're doing, which is great. And I think 2 of those states are our northern New England neighbors, because we've really tried to New Hampshireize this program. Obviously, the types of weather threats, weather potential is a lot different in New Hampshire than it is in Alabama or Louisiana or Florida, all of which have either exactly this program or something similar to it. So our northern New England partners want to know what we've done, because obviously we share a lot of the same weather characteristics. So I really think we're onto something very, very viable, something very innovative. But we'll make Brian available to you during the work session. He can really dive into the detail of any questions that you have. And again, he'll have the benefit of being able to tell you all of the experiences and the background and the stories behind why we've done certain things. In a lot of ways, we've done them either because they've worked well in other states, and Brian would be able to speak to that, or because it didn't work so well in some other states. And there again, Brian will be able to bring you through the detail of all of that. But for today, certainly happy to answer as many of your questions as we can.
Representative Teresa.
So, thank you, Mr. Chairman. Thanks for taking the question. So as the bill 297 FN, the first part of the bill relates to the employer health benefits, which is health insurance company. And then second part of the bill, you're talking about home insurance. What's the,
I would say just out of the block.
I'm sorry?
I have a history.
No, my
Okay.
question is why are you combining both the
That
things
history
together?
where it says purpose and policy, that's gone.
Mr. Chairman, I think what he's speaking to, I think he's a little bit tripped up. He came in a little bit late when I explained why this is a non-germane amendment.
Oh,
So it's a non-germane amendment because when we originally were approaching this program, we had it as a part of our House Bill 2 requests. And then we got feedback from leadership in the House and Senate that they wanted it to go through the committee process so that the subject matter experts, all of you, had the opportunity to vet it. So what we needed to do was to find some bill that we could attach this to so that we could have this non-germane bill hearing, and there would actually be a vehicle for it to move forward to House Finance, I assume, if all of you are in support of this program. So yes, the title of the bill and the amendment are two totally separate subject matters, but this is the way we had to do it in order to make it all work for the process you have. We got the feedback from leadership about how they wanted us to approach this after the
so
bill
you
filing
you
period
okay with that? Do you
closed.
understand? Okay, so basically, we have a process here in which, in terms of when we amend bills in committee, in the subcommittee, and we amend bills, the amendments are directly related to that issue of that bill. Now, over the years, and let's say the senators taken more advantage of this than we in the House do, which is that they'll take any bill and they'll take any other issue that had nothing to do with it and slap it on that bill. Okay? So we have a policy here in the House that says that if you're going to do that, if you're going to take a non-germane, in other words, it's not anything to do with the title of the bill or the original purpose of the bill or whether the original sponsor even knows that we're doing it to their bill. Okay? That we're taking an amendment, we're adding to it, but we're having a proper public hearing. So no one can ever say this thing came out of nowhere. I don't know anything about this, or have we had a fair opportunity to discuss and thoroughly thrash out what the purpose of the bill is and whether it's appropriate for public policy.
Okay, maybe we can talk more detail during a subcommittee that time, but I'm still having a hard time understanding that. I understand the technicality of this, why you're doing it.
Okay.
But the point is that because these two are two different subject matters,
Yes.
and somebody could be opposed to the first part while somebody could be okay with the second part, how are they going to vote on the bill
So
itself?
what we do when we get into the subcommittee,
Yeah, we can talk.
we will thrash out both pieces.
Okay.
Okay, and the underlying bill, I'm not sure, remember what the underlying bill was about. Okay. So the sponsor does know about the bill. He doesn't know about this non-germane amendment. Okay.
Okay.
And this and the simple little, I would say that one of the reasons why we chose this bill is because both these issues are something that the department is requesting. Okay. So the underlying bill, that it was a simple little bill, that it's an ongoing issue that we have, that we will discuss both pieces. And so theoretically in subcommittee or in the full committee, we might decide to accept one or the other or neither. So we'll have that choice. But so I would say is, if you were to look at the title of the bill, now what you want to do is say the bill now has two analysis. There's two different issues in it.
Yes.
And because we've had this non-germane hearing.
Okay, that's fine. I think I'm good for now, but we can
Okay.
talk later on this.
Fair enough. Representative Gibbs.
Thank you, Mr. Chair. Is the insurance department or anyone going to testify on the original bill?
Yes, Representative. I believe that bill has been heard.
We already had that hearing.
Thank you, I forgot.
Okay. Okay. Representative Silly.
Thank you for taking my question. Can you, you may have mentioned it, but can you please repeat who is going to administer the program? Is it part of your if it's part of your department, will you need additional headcount? I didn't see that.
So the department will administer the program. For us, we're going to dedicate one individual to do it. I have the position already. I'm going to repurpose a currently existing position for administering this program. And what we foresee, and we'll obviously need to work with Treasury in terms of getting the dollars out the door. That's not, my understanding, is anything unusual. MOUs are signed quite frequently between agencies and Treasury to make sure that everything flows and works exactly as it should. But really, for this individual within the department, it will be taking in the grant applications, ensuring that the application is in alignment with eligibility, the eligibility criteria in the program. And then again, as I've said, it's a first come, first served basis. So this individual will start with the applications at the top, go through, get to the $1 million number, and then we will probably put forward a system that will hang on to the applications that we've received that were not approved because the funds had been expended already. And we'll check in with the homeowner as the opportunity for them to reapply becomes available the next year to see if they want their grant to remain under consideration or whether or not it's not needed anymore because they either decided to do the work themselves or, you know, the tree that they wanted to get rid of went down on its own, hopefully not into their house. But it's a first come, first served basis. The one individual who administers it will just be taking in the applications, making sure they're eligible, and then communicating with Treasury to get the dollars out the door.
Okay, so, but to answer your question, it's a very important question. Who's going to administrate it and who's going to do this? Okay. Yes, they're going to find an in-house position. This bill, if we decide to go forward with it, with this amendment, is going to go to finance. And finance might say, no, we don't want that position at all. And this bill will die, die, and they might get rid of that position. But that will be up to finance in terms of figuring out how it makes most sense to operate the department.
But then they would have to follow up to make sure the work was completed as contracted?
Well,
Or-
I would, at this point, if they weren't willing to fund the position,
No, if they do, if they fund the position.
they fund the
And
position,
this person goes out to say, oh, look, the tree came down? The tree has been removed appropriately?
Yes, there will be a.
the idea is you're doing it ahead of time. This is, I keep trying to say, because I did get a phone call from a former legislator. This is proactive rather than reactive. So in terms of proactive is that the program is in place, that it's in there. So it's up to the individual homeowner to say, I want to take advantage of it. They need to apply. And then in terms of then making sure all the hoops have been jumped through and everything, the money comes from the fact that we already have a tax, for an insurance tax. So it's not, but that, I mean, reality is, I don't think this is going to get used a lot. A is people might be in denial whether it exists and how well they market it and let everybody know it exists. But B is most people love that big old tree and just think it's the most beautiful thing in the world, and it pains them to think that maybe they should cut it down. But at this case, if they didn't cut it down and it falls on top of their house, they can't blame. They only have
Right.
themselves to blame for not taking care
I
of
just
that.
wanted to make sure I understood the process. So they apply for the grant, which it doesn't have to be paid back. And they say, I'm going to take down the old tree.
Right.
They get the money, but then they never take down the tree.
Oh yeah,
There's
we
there's
won't let that
safeguards in the
happen.
program for that. Emily's going to speak to that piece, if I might. So we have a position in the department that is currently funded. We would just repurpose that position for administration of this program. So there's no new money in terms of personnel. What I would also mention to my friends over at House Finance is I've already defunded 3 positions full-time and 2 part-time positions. So I've really tried to do my part on the position front, despite the fact that I don't know how much good it does them since we're a self-funded agency. But I got into the spirit of what they were looking for. So hopefully they'll let me keep this currently funded position. And again,
So how do we make sure no one,
Yep,
we're
Emily's
not going
gonna
to get
speak to
scammed?
that. And if I could, I'll just direct everybody to page 4, line 17. That's going to be there in black and white that spells that out.
As the commissioner noted, the proposed 407E9 is the provision that speaks about the payment of the funds. And so under that provision, the applicant would have to show that all the work had been completed, and it requires certain things, including a copy of the signed contract, a copy of the itemized work, and a sworn affidavit from the contractor who performed the work. So we are, the bill proposes including safeguards to make sure the work was actually completed.
And again, that's a model that we borrowed from the other programs. And so far as we can tell, in terms of the feedback that we've gotten, that provision has worked very well to ensure that the work is done and that nobody's making off with the dollars. There's also some provisions in here that say that the payment will be made post the work being done, but we understand that in some cases, the contractor is going to need some upfront payment in order to be able to procure the materials that are needed to do that work. So those dollars will be made available upfront so the work can begin. Then the rest of the payment will follow once the project is done. So those safeguards are present, and as I've said, based on the experience of the other states, they have worked well.
Okay, yes. Representative Herbert.
Is there anything in this project that might be able to generate cash outside of the insurance coverage? In other words, if somebody has $6,000 project and you say fine and you do the project, can the person that had the project say, would it be okay if I spent some of my own money? And $1 million is going to go fast.
Mm-hmm.
So I'm just trying to think of any avenues that might be available to generate cash.
Sure. I think if I've understood your question correctly, so the dollars from the grant program can be used, but it's not like that's as far as the project can go. So for example, if you need a brand new roof, depending on the size of the home, but let's say it's a single family ranch style roof, that's probably going to run you somewhere in the neighborhood of about $20,000.
Right.
So you're going to have the 10 from the grant that you'll be able to bring to bear, but obviously the homeowner is going to have to account for the other 10 in order for that whole project to be complete. As you'll see here, there's kind of two tracks that the consumer can choose to go on. There's the track to be IBHS certified Gold Star standard. And again, depending on the house, that's probably a longer term project. There are a lot of aspects that go into meeting all of those standards. You're not going to be able to get there just on a $10,000 grant from this program, but obviously the grant can be helpful. And if you do have the resources as an individual homeowner that you can bring to bear, you may be able to fully tackle all of the components that go into that IBHS certification. But for those who don't want to go down that comprehensive route, again, we've created a second track where people can take on smaller, more modest projects that, again, while small seemingly to them, is going to end up paying them significant dividends when it comes to underwriting, getting renewed, getting quoted for a premium, not getting tossed into the surplus lines market. So I hope that was your question.
I like that answer. The savings is going to come when they get a cheaper
Right.
homeowners policy because they've addressed that problem.
Right.
Right. Representative Ammon.
Thank you, Mr. Chair, and thank you for coming and testifying. I just want to understand the position, sort of piggybacking on what Representative Teresia had asked. House Bill 297, the original bill, is not part of the amendment, right? The amendment says, amend the bill, page 1, line 6, amend the bill by replacing all after section 1 with the following. the following is the Granite State Home Mitigation and Resiliency Program. The original bill appears nowhere in the text of this, as far as I can see. So the original bill is gone.
Yeah, we may have to make an adjustment there. I think we drafted this amendment as though it were an assignment we typically get from you, which is to say, we need you to rewrite this bill. So I think that's why that language was there. But no, we certainly do want to keep the underlying policy matter originally included in House Bill 297 and then have this as part of that as well.
Okay.
Okay, after section, all right. So the former commissioner's still taking good care of me over here. So the original text of House Bill 297 is all contained in that section 1, Representative. So the amendment as it's written would just tack this on, but preserve what's currently there in 297.
I see. So the Roman numeral 5 on the original bill is still going to.
Well, this is a good time for everybody to learn a little bit of how crazy our legislative process can be. If you look at the bill, you'll see it says on line 6, amend the bill by replacing all after section 1. So if you go back and look at the original bill, section 1 was the original language of the bill. And then it says, then now section 2. So it is a little, when it says replacing with the following, so that it means they try to fix the title, amend the bill replacing all after section 1. The key element there is that these little numbers on the left-hand side, and you would say we'll see some other bills like department bills where there'll be up to 10 or 11 because there are all these different sections of the bill that they're taking in. But the key element is each section is going to flow with one RSA. It's going to be one thought in terms of as an RSA is listed.
So just to follow up.
Yep.
So all after section 1 on the original bill, it's really only talking about line 24 of the original bills, the effective date, that's replaced.
Correct. So that's really what it's replacing. It will be the effective date, which I think was a problem with the original bill in the first
Yeah,
place.
I think there was going to need to be an adjustment there anyhow. Yeah.
Yeah.
It's a little wonky. I mean, not to complicate matters, I suspect what'll end up happening is if we are able to get you all comfortable with this program, you move it along, it's going to go to House Finance, and House Finance will probably cleave off this program from 297 and consider it within the larger context of House Bill 2
Right.
and everything else that they're working through right now. As
Oh,
they
good.
think
So
about
this is another thing we need to bring up for you freshmen, okay? When it comes to the budget, we actually have two bills. We have House Bill 1 and House Bill 2. House Bill 2 is also is known as the trailer bill because it implements everything that's in House Bill 1. Otherwise, it's known as the Christmas tree, and where everything, all the different issues are all dangling off of this wonderful tree. So, Representative Burrows has a question.
Thank you so much. I have a question. I have a constituent who lives in a flood zone. She has a house, and actually, she is the mother of somebody in this committee. And that I don't care what you do to that house is going to fall into the river one day. So would people in those situations where climate or flooding is going to be inevitable, would this program be available to them?
because of the particular characteristics of where the house is located, it's probably going to be tough for them to ever be able to position themselves to do well in underwriting. It's probably incredibly difficult for them to get flood insurance. I assume they have to go through the National Flood Insurance Program. And if they don't have a policy through them, I don't know who this person is, beg them to do it. Whatever you do, don't let them have the assumption that they've got flood insurance coverage via their underlying homeowners coverage. Way too many people make that assumption, and then disaster strikes. And they are some of the most miserable conversations I have to have with constituents because they've just lost everything. They thought they have coverage, and they are completely out of luck.
What was the agency?
So it's the National Flood Insurance Program. It
Okay.
is a federal program, obviously, backstopped by the federal government that makes flood coverage available to individuals who cannot get coverage in the commercial market because of where they happen to be located, which if they're in a floodplain and your fear is that eventually that home's going to fall into the river, they're going to have to go through NFIP.
So Mr. Musk hasn't eliminated that agency yet?
Not that I'm aware of.
Okay,
Not that
thank
I'm
you.
aware of.
Would you believe? Okay. Thank you very much.
All right. Very good. We'll
All
be here
right,
for the
I got
work
one
session.
card here from the former commissioner. Oh, yeah. Hey, DJ, can you make sure there's a card? You guys made a card. Thanks.
Chairman Hunt, members of the committee, I'm going to
Just
teach.
hold on a second. Yes. Yes, Representative Spear.
The $1 million that's going to go to paying for the program.
I thought it was like 100,000 or 200,000.
That was $1 million.
Okay.
So it's going to come out of the premiums,
Premium tax.
the premium tax. Ordinarily, that money would go into the general fund?
Correct.
Okay, so the finance committee could very easily.
That's why this,
just kill
this
it.
is this exactly.
Okay.
So this all might be for naught, but we're giving our college try. Yes. Good morning, Chris.
Chairman Hunt, members of the committee, my name is Chris Nicolopoulos. I'm here representing the National Association of Mutual Insurance Companies, which is one of the largest trade associations for P&C insurance carriers. Some 60% of insurance written in New Hampshire is written by one of our members. And we're here to support the commissioner's amendment on this bill. We've seen a number of states adopt resiliency or fortified home bills that have been very effective. There are a number of states looking at, including Maine, is looking at funding a program with nearly $15 million in the LD1, the governor's budget. This plan, though it's not a tremendous amount of money, will allow New Hampshire to test what was successful in Alabama. Ultimately, Alabama put a program in like this, has had an opportunity to have cat losses, and it's looked at the houses that were fortified as compared to the houses that weren't. And there was a drastic reduction in claim level for those houses. And so the industry is supportive of the commissioner's efforts. I'm happy to answer any questions.
Representative Ammon.
Thank you for your testimony. If this is such a good idea, why doesn't the insurance industry fund these programs?
Good question, Representative, because it's good for everyone, right? It's good for all of our citizens to have better built homes. An insurance company in any given case can't afford to fortify a home. You know, think of what your homeowner's premiums are as opposed to a 10,000 grant. Like, there's not sufficient money there to do that. I think ultimately taking money from the premium tax is a roundabout way to test this program. But ultimately, I think the good of citizens in total benefits from that. It really should come from the general fund.
Thank you very much.
Thank you.
All right, having no more cards, I will close the public hearing on the non-germane amendment House on HB 297. Okay. So while most of the committee members are here, just next week, we will be doing subcommittees on all these early bills. But we will be taking this bill up next week. And because it's just a subcommittee, we don't necessarily need to have a big committee room. So I have the availability of room 104, which is down on the first floor, so that we'll use that on Tuesday. And I'll just decide which ones I put in there. So Tuesday and Wednesday of next week. Don't go far, right? Okay. You want to give me your cell phone number so I can, we'll. Okay, we'll open up the public hearing and hear from the prime sponsor, Representative Stringen. I guess before we get too far into this, I want to make sure everyone in the room knows that we've already had a hearing on the issue. So let's put it this way. I'm fully confident that the committee members understand the problem. So what I would have you do is focus your discussion on why you think this bill is the right answer rather than the other ones. So you feel free to contrast, but again, you don't have to explain to us the problem. For some of us who have been doing this for a very long time, I know the problem very intimately, but for the new members, I think everybody's pretty well up to speed. Good morning.
Good morning. Thank you, Mr. Chairman and esteemed members of the Commerce Committee and Consumer Affairs. I'm pleased to introduce House Bill 725 relative to ground ambulances services. My name is Jerry Stringham. I'm a representative from Lincoln, Woodstock, Easton, and Livermore. My personal background includes over 25 years as a consultant in healthcare reimbursement systems, particularly related to various fee schedules relating to things like physician services, hospital outpatient services, and so on. So that gives me some relevant experience for this different fee schedule based mainly the ambulance services. This bill does two things. It extends the prohibition on balanced billing to ground ambulances services and establishes a non-contract rate for ambulance services for those insured with commercial health plans at 325% of the Medicare rate for those plans that have not negotiated a rate with that particular ambulance provider. Obviously, this isn't an ideal situation. This is a service that New Hampshireites have been used to getting without having these additional monies being needed. And whether the money comes from insurance companies, whether public or private, from the patients themselves, or from property taxpayers, we're talking about new money here. And this situation has been created, and I know we've talked about it a little bit, as the ground ambulance business model has broken down. And it's been discussed in this committee and part of the presentation on two other bills, one of which I testified on. So the old business model has collapsed, and services providing ambulance care have shut down. In working on last biennium's budget, four ambulance providers had gone belly up in 3 months during the time we were working on the budget. And obviously, that caught everyone's attention, including this committee. At the same time, the crippling impacts of a single ambulance bill can still financially ruin an individual, and efforts to extend the prohibition of balanced billing because of the problems with the business model and ground ambulances have not yet extended to that. So I think we saw the commissioner's bill, while using a different model to make up the lost funds that are needed, still also included a balance billing prohibition, as this bill does as well. This bill provides ambulance service providers with sufficient insurance reimbursements to stabilize their business and protect our ambulance riding consumers from financial ruin at the same time. And that's basically the two purposes we're approaching here. The bill's sponsors have been part of the commissioner's ambulance study, which led to the publication of the New Hampshire Ground Ambulance Cost Study on December 23rd, which is additional information that's available. And I would like to congratulate both the authors and the insurance commissioner for the work that's been done there. It's an important study that underscores some of the challenges faced by the business model for ambulance services. For example, in establishing the cost of the services, it assumes that the ambulance providers will continue to receive funds from towns and donors at the same level. So that means there's still money outside of those paid by the people who are actually getting the ride. And I know I have 5 T-shirts at home that say Linwood Ambulance running 5K on them. And so, you know, these are often charities that do receive money outside of the payments they receive. And this cost study assumed those would continue to be on there. You know, that was part of the questions that came up on that. The idea of balancing, the idea of continuing to have the balanced billing in place, in part was meant to create sufficient incentives for insurance companies and providers to still have a reason to negotiate. So if somebody gets a bill for thousands of dollars for an ambulance ride that they weren't even awake for and didn't even ask for, they go back to the insurance company, and sooner or later there could be some resolution in there. The idea of having the 325%, which according to my records here, in some cases will be more than the invoice, so the actual payment would still be below that amount, would provide sufficient capital that we can get rid of that incentive in there. You know, using the cost study, the anticipated cost to an insurer in the insurance model, the insurance model is about 36 cents per member per month. That is how insurance companies generally think about, is a program expensive or not. This model would probably be closer to 60 cents per member per month, or about $7.20 a year in premium. Although, you know, I think that's open to some discussion. Again, this would only apply to non-contract providers. There's nothing that would prevent an Anthem, Cigna, or any of those insurance companies from negotiating a rate with the providers directly. You know, this model provides no cost to the state taxpayers. I think my reading of the commissioner's model, which asks that all insurers pay the same amount, would mean that the Medicaid rates would go up. So there would be some impact to state taxpayers, which I'm not sure there's a stomach for right now. In my experience in working with Medicare in fee schedules and waivers is that would be very difficult to get additional money from Medicare specifically targeted to New Hampshire. When they do waivers, it's typically the state comes up and says, you're providing this much money for ground ambulance services, but you want us to pay this much for transport and this much for emergency care. We would rather just lump sum it. We want to do it. We want to spread the money around differently. We don't want to use your fee schedule, and they often ask for waivers. So when we talked at the last meeting about the Maryland program, Maryland has a waiver and doesn't use the DRG system for paying hospitals for that, specifically that reason. In 1983, when the system came out, they said, we don't like that system. We want to use our own, and said, if you can meet your cost reduction targets, you can continue to do that. And amazingly to all of us, 42 years later, they're still doing it. So if my understanding is of the commissioner's bill, and I guess we'll all come back in subcommittee and review the 3 bills that were put together, you know, I do think that's kind of a flaw, or that would have to be addressed. I do think, unfortunately, it is normal for commercial rates to be higher than Medicare and Medicaid, and one-payer systems are quite unusual. So, as I said, I understand the 3 bills addressing the topic will be discussed, and I'm sure any of them could be moved to get something that'll work for the ambulance providers and for our citizens that unfortunately need a ride from time to time. With that, I will open it up to any questions that you may have. I know we have a lot of other experts here to speak as well.
Representative Teresa.
So thanks for taking my question. I have actually two-part question. First is, based on experience in the current system, the way you are doing balance billing, what percentage of balance billing you are able to recover? That's first question. And second question is that how are you going to address the ambulance services to people who don't have insurance?
So let's see, one question is how do ambulance service providers handle their customers that don't have insurance?
That's the second question. The first was, in the current balance billing system that you have, what percentage you're able to recover from the balance billing? Do you have information on that?
There are some recoveries that get that way, but in Lincoln Woodstock, I know the numbers are not significant.
So you don't have any ballpark like 50%, 25%?
There'll be other
10%.
people testifying, and we'll have one of them
Thank
give
you.
you a harder percentage.
Yeah, and in terms of uninsured get bills and whether they pay them or not is often a matter of litigation. So.
Representative Ammon.
Thank you, Mr. Chair. Thank you for your testimony.
You're welcome.
Just because I don't know what the term means, I'm asking so I can get clarification. Page 2, line 3. It said, I'll read the whole sentence. If a claim that a health carrier receives for ambulance service provided to a covered individual by a non-participating ambulance service provider is not a clean claim. What does a clean claim mean?
Well, in the way I would use clean claim is sometimes a claim comes and it has all the information, like what the diagnosis is, the information that the insurance company would normally need to see to make sure that this patient is eligible for insurance and that it's a diagnosis that's appropriate for the type of service that's been given. I'll give an example of, we're putting in the non-transport as a reimbursable event, but if an ambulance service goes to, say, a car crash, and the person just waves them off and said, I don't want to see anything, there's been no medical intervention provided. That's actually still would not be billable. But if they hook an IV in, they give somebody Narcan, and then they say they don't want, then that would be billable. So there would need to be a claim with adequate documentation so that the insurance company should process the claim. And to me, that's what a clean claim is. And if they have to send it back for clarification, then it's a non-clean claim.
Okay, any other questions? See none, thank you very much. Chair will call on Michael Sitar from the New Hampshire Association of Fire Chiefs. He didn't say he was for or against the bill, but I'm gonna guess that I had it in the right pile. He's for.
If you don't mind, I have Chief Ed Walker with me. There are two of us in that.
Does he have a card in with me already?
he
Oh,
does.
good, great. I like that. Perfect.
All right, good morning. My name's Mike Sitar. I'm the chief of the Tilton Northfield Fire District, and I'm representing the New Hampshire Association of Fire Chiefs. My counterpart is Ed Walker. He's the chief of Peterborough, and he's representing the fire chiefs as well. Today, we're here to speak in favor of 725, and the reason, the bottom line is, what we want to do is help reduce the impact to our taxpayers in our community. And every penny that we can get from the insurance companies going towards the cost of the services that we're providing is going to reduce the tax impact to our taxpayers. That's the bottom line.
And to To further speak to that, the two strong points with this bill are the 325%, and we're handing out the full testimony. You see in the bottom, the 325% aligns closely with what a number of other states in the country have chosen to be a percentage relative to the Medicaid rate, which is a fairly established rate, some of those even here in New England. And the other part of this is by establishing this state rate, it also helps with in educating with other insurers or with other parties about what a fair and reasonable rate is for reimbursement to help recover some of those costs, which we currently don't have.
Okay. Any questions from anybody? Like I said, they're very well informed on this issue.
Thank you. Thank you.
Okay, Chair will call on Derek. Amazon?
Ammon?
Ammon? Alman.
Hooksett?
I know you, Dick, but Derek, but I don't your name. You don't have to sign these things. Thank you.
Red light.
There you go.
Thank you. Again, thank you, Mr. Chair, committee. My name is Derek Alman from Hooksett. I am the president of the New Hampshire Ambulance Association. We do stand in support of this bill. However, my esteemed colleague, Chris Stewart, will testify to our components of our support. I did see, and Representative Amon, I appreciate your question on what a clean claim is. I do have some, written documentation in front of you that we would ask that you consider, when we discuss what a clean claim is, because that term has been weaponized by the insurance agencies. And we really feel that that is something that when you move forward, with any consideration using that term, and I can go through this line by line. You certainly have it in front of you. What would you prefer, Chairman?
We're going to discuss this in subcommittee, so just give me the highlights, or what do you think is
The highlights
the
here,
most salient, important items?
we certainly give it what a definition of a clean claim is, to what we expect, what is reasonable and what a reasonable standard that would apply to what a clean claim is. We ask for, the process that would occur when a clean claim is provided and a timeline that when a clean claim is provided as to when the provider could expect payment and what the expectation would be in the event that a clean claim did not happen. And then because of our experience, and certainly my peers in the aeromedical industry could testify to this, the idea of a clean claim being weaponized, if they do not perform, we're looking for some financial impact in the form of a penalty. And the number that I give here is not only the cost of the claim, but a 100% increase on that, claim and plus 25%. So I think there does need to be some financial penalty because otherwise we do have experience that the insurance companies will just sit on things, delay it, and call forth their, own administrative procedures to delay.
Okay, so I'm going to throw this question out for you, but it's really for everybody to think about. Is there anything else in the fire department in which you can balance bill with now? Is there a fire in which you can bill somebody, balance bill because you had to bring your trucks and you had to, take care of them?
Chairman, I am not a firefighter. I've been a paramedic for 35 years and proud to say I am supportive of firefighters, but when, the rats are running out of the building and those people are running in, there are better people than I, believe me.
Right.
So I
I
don't know
do
the answer to that.
apologize. You're the wrong person to ask.
Yes.
I apologize. Okay, but thank you.
Thank you, sir. Thank you.
All right. Don't have any fire chiefs left. Oops. Okay. Chair will call on Chris Stewart, who I know he doesn't say what he's representing today, but
I apologize for that. New Hampshire Ambulance Association. I only have one page. I was trying to be brief, so I know we'll be at a work session. So the New Hampshire Ambulance, my name is Chris Stewart. I'm on the board of directors for the New Hampshire Ambulance Association. The association supports House Bill 725. It would end the need for balance billing in New Hampshire once and for all, which I and we believe fill the revenue gap that would be created by ending it. As I've previously testified, we do not believe other ambulance reimbursement bills being considered by this committee would accomplish that in a way that is financially responsible to either the consumer or the provider or both. This is not about inequity between Medicare or Medicaid reimbursement rates. Those are important but separate issues. It's about maintaining a neutral revenue stream for all ambulance providers if they are no longer allowed to balance bill. In our ambulance summit meetings last year with the Insurance Commission, the state was unable to determine the amount ground ambulance providers collected by balance billing. The PCG report expertly details the actual costs of the services. However, for all of its analysis, it seemingly fails to determine or reveal that amount either. And that is the absolute heart of the matter at hand. I believe all agree that the financial gap that any prohibition to collect balance billing dollars creates needs to be bridged. The fiscal health of every ambulance provider in New Hampshire depends on it, particularly in rural areas. We believe that 325% of Medicare will bridge that gap and not result in a significant health insurance premium increase or spend. It is a fair compromise that does not place any undue additional burden on the community providing the service, the consumer, or the ambulance provider. And I look forward to working with you in work group or subcommittee group to come up with a reasonable solution.
Oh, Representative Miles.
Thank you, Mr. Chairman. Thank you for taking my question. Is 325% that is in this bill, is this what you need to maintain EMS services to the very rural areas and sick population in this state? Is this enough?
We believe that this would be a neutral amount. If the ability to balance bill was taken away from the providers, which we all want to do, that 325 would make up that gap.
Okay. Will it prevent operations from closing?
I don't know the answer to that. As I said, this is one piece of a giant puzzle. And the focus of this piece is ending balance billing without financially harming providers or consumers.
Thank you.
Representative Teresa.
So I thank you for taking a question. I bring the same question that I asked previously. Since you mentioned that you are going to, with this bill, you're going to bridge the gap between the balance billing and the amount that the department receives. So would you have any information about what percentage of balance billing are you able to recover right now? Is it 50%, 25%, 175%? Any information?
That's a great question. That percentage varies widely by the type of a provider that is doing the balance billing. There are a number, probably more than half of the ambulance services in New Hampshire are small, less than 20-person operations that are probably not very well versed in the billing process. So their ability to collect is not as good as others could be. I don't know an exact number. As I said, these reports were not able to determine that. So we don't have an idea. We know how much it costs to provide the service, but we don't have a true idea of what that gap is.
So it differs from ambulance service to ambulance service? Or so do you have any average at a state level that you're able to recover so much amount?
I do
percent?
not. No, that's
thank you.
the magic number I think we're all
Over the years, we've used the numbers 30%. 30%. 30%. Any other questions? Seeing none, thank you.
Thank you.
Okay, let's change pace. Sabrina Dunlap from Anthem in opposition to the bill. Is she here? Oh, there she is.
Thank you, Chairman Hunt and members of the committee. I will be brief, appreciating that there will be more conversation on this. I think it's tough to say 325 is a compromise. I'm still unclear on where that actually came from. And the way the bill is written, functionally, that will set a rate of 325%. I know it lists municipalities can set their own rate, but I don't know why anyone would set something lower than 325. So functionally, we're talking about 325% of Medicare. I think we appreciate the ban on balanced billing, also something we want. Again, I want to emphasize that is something that comes from the provider to the member. I think there's a misunderstanding sometimes that it's the insurance company that's sending that bill to the member. So obviously we support that as well. I think I'm confused by the section on prompt pay and the comment that clean claim is weaponized. I don't know what that actually means. There's a very clear statute on this already, 420J8. There's lengthy provisions on prompt pay. Clean claims is defined already, so I don't understand how this would help. And I think, again, we are talking about a very small piece of the pie, and Chris just said that. And it's true that, Medicare and Medicaid and people who aren't insured are a big part of this, as well as our municipalities. And Chairman Hunt, you said that at the insurance department bill hearing as well, that this is a section of healthcare that is just different, and it does involve the municipalities. And I think to put, this set rate on just the fully insured market, I don't think that's fair. I don't think that's neutral. So I think we would be in favor of further discussion on the insurance department bill. I think that did the deepest dive we've seen so far on the true costs for providers. So obviously happy to talk more, happy to take any questions. Thank you for the opportunity to testify.
Any questions? Yes, Representative Miles.
Thank you. You're from Anthem.
Oh, I'm sorry. I did not introduce myself. Sabrina Dunlap. I am the Senior Director of Government Relations for Anthem. I apologize.
Do you currently have hospital ambulance contracts?
We do, yes.
So can't you set your own rate for yourself?
With
Why are you against this? It's if you're able to set your own contract rates.
We do negotiate with ambulance providers to try to bring them in our network, and we negotiate those rates. I think to set a rate like this for out-of-network providers, I don't think this is a reasonable rate. And it also disincentivizes any ambulance providers to come into our network, which we are always trying to do, because it helps our members to have ambulance providers in our network.
Or exit, or not have a contract. Does someone say, well, pass this legislation, then?
Well, correct. Yeah, I think this would drive ambulance providers out of our network. I think that would be a consequence of this bill as well.
Thank you very much.
Thank you.
Chair will call on Justin Van Ethlen from Holderness.
My name's Justin.
No, you got to turn it on.
Button. There we go. Sorry. My name's Justin Van Etten. I serve as the chair of Stewart's Ambulance. We're the largest rural provider of EMS in New Hampshire. I also serve as the chair of Municipal Resources. We consult with municipalities throughout the Eastern Seaboard. Comparing the two bills, two issues that I wanted to bring up. The first is I've been meeting with cities and towns, boards of selectmen, city councils for the last 3 months about this. And one of the questions that I hear most frequently is the difference between the two bills is $3 per year for an insured. It's relatively small amounts of money. But the amounts of money that our property taxpayers are being asked to pay for is significant. Why is it that there's only a $3 per year extra cost between the two bills for insured, and there's a heavy, heavy hit on property taxpayers? And my understanding of this is that the NHID only regulates about half of the insureds in the state of New Hampshire. The other half are states of Massachusetts, Rhode Island, Connecticut, all of these other insureds. And when they set a cap, what is going to happen, because all of these huge insurance companies operate in multiple states, right? So if 316 goes through and they say it's 2 times Medicare, what we've seen happen time and again is that, these gargantuan insurance companies, ABC insurance companies, they're going to say, well, the rate for New Hampshire is 2 times Medicare. We're going to pay that same rate now for our insureds in Massachusetts. And the towns, the property taxpayers, are all going to have to foot the bill for the discount of the Massachusetts insureds. And the New York State insureds are going to get a huge discount under Bill 316. And again, our property taxpayers are going to foot the bill. Rhode Island insureds, huge discount once again, and our property taxpayers are going to foot the bill. And so that's one of the big challenges with 316 is we are inadvertently and unintentionally providing huge discounts to out-of-state insureds, and we're asking our local communities to pay for it through their property taxpayers. Now, I've talked to the commissioner about it. He said that's outside of his purview, and he's absolutely right. It is, but I think we all have to be cognizant of what the impact of our actions are going to be. Anthem is not going to say, well, our Massachusetts insureds are going to continue to pay more. It's just the discount we're going to give to New Hampshire policies. That's not the way it happens. And so that's why taxpayers, our property taxpayers, that is, are going to get hit so hard if you try and cap it at 2 times Medicare. Because quite frankly, Representative, to answer your question, ma'am, 325 is not enough to keep EMS agencies from going out of business. 325 of Medicare is not enough to prevent a lot of property tax payment increases, but it is a compromise. And I will tell you what I like the most about 725 is that it respects that we have an electoral process here in New Hampshire. Voters show up in the booth and they elect their boards of selectmen and they elect their city councilors. And those boards of selectmen and those city councilors are stewards of the people that have elected them. And these folks get to choose what the right rate is for their community. Mind you, it's capped at 325, which I find to be hard that say Stewartstown is going to be treated the same as Manchester. But it's locally elected representatives. And from what I can see of 316, and I struggled to wrap my head around this, are we really going to say that insurance companies and insurance company executives are better stewards of the interests of our residents here in New Hampshire than locally elected select people and city councilors? I feel like personally having interacted, I trust my selectmen. They're doing it volunteer and pro bono. Why wouldn't they be given the option of choosing the right amount for their community? And if they choose the right amount for their community, why shouldn't insurance companies have to fund this? Why do we have to do everything on the back of local property taxpayers? So that is my 2 points. Thank you very much.
Representative Gibbs.
Thank you, Mr. Chair, and thank you for coming in to testify this morning. I have 2 questions. The first is that this bill provides more than twice the Medicare rate. It provides for 325% of the Medicare rate. So wouldn't that reduce the impact on property taxpayers?
Absolutely. This is a significantly better bill than 316.
Thank you. And my second question is, you said that 325% wasn't enough, but we've heard from representatives of the ambulance service providers who said that 325% looked to them like a reasonable amount. Why are you more qualified than the providers themselves to say what's a reasonable amount for the providers?
Great question, ma'am. I'm not better qualified. That's just my personal opinion. But what I will say is the 325 is, I believe, the standard that's used in 7 or 9 other states in the United States. And it's 325 or higher in those communities. Personally, when I look at this, I would suggest that a place like Stewartstown is going to have significantly higher costs than, say, a Manchester, or a community that's an hour and a half from a hospital might have a higher cost than a community that has a hospital in it. I would love for there to be some sort of a pressure release valve or something so that these communities that are very rural, that are very strapped under their property tax burdens could maybe pick something higher than 325.
Follow-up question?
Further question may inquire.
Thank you. But if Manchester costs less and Stewartstown costs more, but basically all of the non-contract ambulance providers are going to get 325% unless they bill for less, wouldn't it balance out for the ambulance providers?
It would statewide, but it would still leave, just picking on Stewartstown as an example, it would still leave Stewartstown with a little bit of a hole potentially that has to be paid by their property taxpayers.
So I have a question for you. When we talked about what the insurance department really regulates is only 20%.
50.
I think it's going to be more like 30.
Okay, sorry.
Okay. And I think there's at least another 30 is ERISA plans, self-insured plans. Why do you, and who are not going to be affected by this legislation at all? At all. Why do you think it's fair to make the small businesses who are in the fully insured plan to pay for those larger insurance companies who choose not to be regulated? Because they're not going to be paying this higher fee. They get to negotiate, they get to do their own rates. They're exempt from this legislation. So you're saying you think that's because that 30% of small businesses in New Hampshire that have the fully regulated plan, they should pay the $7 to make up for the fact that that other 30% of people who are fully insured through their employer are exempt.
It's a great question, Mr. Chairman, and I apologize. The 50% number that I was talking about is our experience and my interactions with the commissioner. So when I've gone through our data with the commissioner, both for the company that I represent, but as well as the municipalities, what we have found is that the insurance companies that are under the NHID, by an order of magnitude, pay the lowest amount of money. In fact, the single largest payer under the regulations of the state of New Hampshire pays less than both Medicare and Medicaid. And so that has been the challenge. The regulated plans, and in my conversations with the commissioner, it's probably inappropriate for me to put words in his mouth, especially when he's not here. But when I've talked to him about this and I've showed this, you know, I'll show him that the regulated insurance company is paying less than the state Medicaid program pays. And the unregulated plan is paying 7 times what the insurance company pays. That's how it exists today. And I think what we're trying to do is bring some level of parity. And that's one of the comments that he's made publicly was, you know, we shouldn't have one insurance company that simply because they're the largest everywhere, they get to pay 70% less than the other insurance companies. And all the insurance companies should be treated with some sort of equity. And just because you're the biggest doesn't mean you should get paid the less. And in fact, in the 2011 study that was done by the New Hampshire Insurance Department, you'll see there was a high degree of parity amongst all the insurance claims. Everybody paid, believe it or not, even back then it was between 3 and 3.5 times Medicare, but all Harvard Pilgrim and Cigna and United and Anthem, they all paid the same amount. And what's happened over the last 14 years is that the largest insurance companies have paid far, far less for ambulance transports, and that's put a bigger burden on the Harvard Pilgrims of the world. And so this plan also brings a level, because you're right, absolutely right, Chairman. It's not fair for these regulated plans to cover so much less of their cost than the other insurance. In the
Yes,
state.
but I wasn't even talking about just the regulated. So you're only talking about the regulated.
Yeah.
And Anthem's regulated plans.
Yes.
Okay. Well, Cigna, as far as I know, they don't have anything that's regulated.
Yes.
Cigna right now is only large employers, ERISAs.
Yes.
So therefore, they're not even in the game. They're not affected by this legislation at all. Representative Spear.
Thank you. You've listed a bunch of numbers there that don't quite compute to me compared to other studies that we've seen. Can you give us some backup for any of this that explains something? Because we're mixing apples and oranges and it's not getting clear at all as to where some of these numbers, I mean, for instance, you made a claim that it's not fair that, are we supposed to leave the building? You know, that Anthem is paying less and less, but that could be for any number of reasons that they're paying because they have fewer people in network. Could be all kinds of reasons. So I would like to see some backup data for what you've said.
Absolutely, Representative. I will tell you the level of parity was from a study, and it's public. Again, 2011, Commissioner Savini's office, I believe, did it, and that lists out what the insurance companies are paying for varying levels or for ambulance calls. And so you can see in 2011 what Cigna was paying, what Anthem was paying, what all of these companies. I work, I don't know, probably 30 communities here in New England, so I see it firsthand. I'm happy to share some of this information. The insurance department has not released publicly a further study since 2011 that shows what it is, but we see firsthand, and I've brought the invoices to hearings here before, that will show you these large insurers paying less than the state Medicaid program.
Representative Gibbs.
Thank you, Mr. Chair. If there are some insurance policies that are exempted from this type of regulation because of ERISA, which is a federal law that occupies the field for certain types of insurance plans, is there anything that the state legislature can do about that?
I'm not aware of anything that the state can do.
So the answer is no.
Correct.
Thank you very much.
Thank you.
Chair will call on Paula Rogers, representing AHIP in opposition to the bill.
Good morning.
Good morning.
Chairman
Silmar.
Hunt,
Yes.
members of the House Commerce Committee. For the record, I'm Paula Rogers, and I represent America's Health Insurance Plans. America's Health Insurance Plans is a trade association representing the interests of insurers, and I may have a battle within my membership because we have Mr. Van Etten talking about Harvard doing this and Anthem doing that and saying things that, quite frankly, I'm puzzled about and interested to hear more about, because he may have statistics and sources that are deeper than mine. But when I signed up, I thought, well, am I opposed or am I in support? Well, I'm not. I'm somewhere in the middle, and let me tell you why. So Mr. Van Etten and I and Mr. Staywas and I, well, Mr. Staywas and I go back at least to 2008, I think, and Mr. Van Etten a little later than that. And so the three of us have seen an array of discussion before this committee and other committees about what to do about ambulance. So the positive part is that something needs to be done, because we can't keep having these discussions. They become more and more aggravating, and no solution sort of emerges. So we have 316 and 725. We have two bills coming over from the Senate, and we have the insurance department study, and we have others saying 325% of Medicare will take care of most of the present tension in the system. I think the charge to this committee is a significant one because the expectations are high. And so I guess my sense is that while insurers in general certainly don't like rate setting, the reality is we sense something's going to happen this session on the House side. And so I think we all need to kind of settle down and engage. And you need to listen to us to a degree, but you have a lot of information you've already gotten. You're probably going to get more. And I just quite don't know what else to say, except that we want to continue to work with you, and we want to be reasonable, and we want to keep people sort of level in their expectations and in their statements, because sometimes we hear things that sort of startle us. And so That's all I have to deliver today, but I really look forward to it, and I know this committee is going to have its hands full. So I'd be happy to try and answer questions.
Representative Miles has a question.
Thank you, Mr. Chairman. Thank you for taking my question. Nothing being perfect, could you get to the point where you could say, this is a good compromise?
Obviously, because I represent an association and different plan members are within it, I would have to consult with them. I just think it's clear from the membership I have that although on the record they will oppose rate setting, the reality is they know they want to be involved in any discussion because it's important to everybody. The people behind me, no matter what side of the issue they rest upon, something has to be done. And I wanted to address, if you don't mind, a bit of a question you had, I think, to Justin Van Etten about the North Country. And I know there's some North Country people here and on the committee, I guess. I haven't really looked at everybody's biography yet this year. But
I didn't ask that.
But the reality is, always over those years, there was a sense, my sense, that the North Country did need some special attention. And I think, you know, internal to companies that were doing the negotiating, I think there was always that representation that long distances, fewer clients that were insured really do put stress on North Country operations. So I just wanted to share that reality and understanding of that particular situation.
Follow up?
Representative Burrows.
Thanks for taking my question. I am a North Country person. I live in the White Mountains. And how much we were talking? Somebody was talking before about the out-of-state people, and I live in a community where tourism is huge. How is that impacting us?
Well, it depends, of course, where the billing party is. If they're out of state, they do not have to honor. Supposing you split the distance and say, oh, it's going to be 275% or whatever, and a bill passes, they don't have to honor that. The other problem with out-of-state carriers is it puts a burden on the ambulance people when they bill.
Yeah.
And I noticed that in the bill before you this morning, there's an attempt to sort of grab onto something about what is a clean claim, because when you're doing long-distance negotiations, and you become frustrated, I can understand wanting a standard about what a clean claim is and when it needs to be paid under a deadline. And on that point, I'm glad you brought it up, because there are clean claim provisions in the insurance code, more on the pure health side and not on the ambulance side. And if you're going to move in that direction, you may want to make sure that you meld them in a way that makes sense.
Or at least make a reference to it.
Thank you.
Great, thank
you.
So Chris and Cheryl, you guys mind coming up together?
Good morning.
Yeah,
I thought red was.
Yeah, I know.
yeah.
There's no green here. It says red. So you want to make sure the mic is pretty close.
Good morning. My name's Chris Coates. I'm the county administrator in Cheshire County, and wanted to come before you and speak in favor of Bill 725. But before I start off, I want to introduce Cheryl Trombley. She is our director of finance, and sadly, our chief was going to be here today but was called away. And I would be remiss if I didn't first start off by saying, Mr. Chair, I want to recognize you and thank you for your support and guidance on Cheshire EMS as we've evolved over the last few years. It's been important. So a little quick history, and then we're going to try to get through this really quickly. Cheshire EMS was came to be 2 years ago when our major vendor closed. It was in business for 60 years. It was $2 million lien to the IRS, and it was shut down. There's a lot of reasons for that reason, but the bottom line is we had a decision. There's some people in this room that we looked to see if they would actually come over and take on the service. The last thing we actually wanted to do was take on this service, but that's the reality. That's where we are today. We are 2 years in, as I said, but really 1 year as the real operational. Because the first year we did just interfacility transfers and a few towns. We are now running 5 ambulances, 1 paramedic intercept, daily, 7 hours, 7 days, 24 hours. We've got a staff of 52 EMTs, AMTs, and paramedics, and we currently contract with 19 towns on some level in Cheshire County out of the 23. We have a little over a $5 million budget, and we've developed a continuum of care that has a wheelchair department in it, but we actually send that out to we support a private firm to do that. This year alone, they're going to have about 13,000 runs in wheelchair services, which means our ambulances are staying for the 911s and the interfacility transfers. We also do interfacility transfers, about 2,000 runs this year, and we are doing about 2,000 911 calls. We are not utilizing taxes, and we are looking at other ways to do the revenue. And we understand this conversation around there's multiple levels that we have to look at, and part of that is private insurance. We also understand, because I've had the opportunity to have lunch with Senator Shaheen and talk about Medicare, and we're going down to Washington in March to talk to our federal delegation about some of these concerns, other concerns too, but these are some on our maps. I've had the conversation with the chair about Medicaid in the state and what we can do. We understand all of these have to work together. Why is that? Because we're looking around the state and we're seeing struggles across the board. We're seeing Grafton County have 2 ambulance agencies right now that are at crisis of not being able to continue to move forward. We're talking about Merrimack County that has an ambulance service that actually serves 3 communities that's struggling to stay afloat. We've seen Exeter and what happened there. I can go on, and it all comes down to the reality of how do we maintain this? How do we put forward a financial structure that supports this network? And we understand in 2026 we've started to talk to towns that they're going to have a significant impact of billing from us, and that they're going to and they understand, and they knew that they had that 3-year ramp up period, and that in 2026 that they're going to see a significant situation occur. Our product our care is excellent. We've developed, we have great staff. I'm in awe of them every single day. And at this time, what I want to do is I just want to give you a little bit, let Cheryl talk a little bit about an example of some of the funding issues that we had. You asked for examples. This is one of those. And I apologize. I can send this example to you electronically and get it out to the committee if that's something you would want to do.
We do like
after the
that. If
meeting.
you're willing to do that, that'd be great.
So Cheryl, if you could just walk us through that.
Okay, so hi, good morning, everyone. Thank you for allowing us to speak. We, as he mentioned, have only been in this business for a couple of years. And one thing that's very interesting, being from a county government and running nursing homes and whatnot, it's difficult to run a business when you don't know what you're expecting for income. And when we compare at least we do know what Medicare and Medicaid is going to pay, but the insurance companies, we don't always know what's going to pay. Blue Cross Blue Shield, for example, in comparison to our charges for an ALS or a BLS run, reimburses about 16% of our gross charges, with Medicare reimbursing 22%. What we have learned is that a very small percentage of our patients that have the coverage are encouraged, well, they're encouraged, but a small percentage will actually reach back out to the insurance company to advocate to pay for the balance bill. And at times that happens. So to us, I mean, they will pay it, but it is a game or a process that they have to play in order to get it paid. But it's a very small percentage that even know or have the ability to do this. So in turn, those balances mainly go unpaid. We do have a collection agency that we send them to. And even though they do go to a collection agency, we really are not getting any response. It's just something that the balance billing, we would like to get away from that, having to balance bill the patients. And if there was a more reasonable compensation, and that's why we do support the House Bill 725, we feel that this would be much more manageable for the patients that are receiving the care to then be able to afford the co-insurance that exists along with what the contractual or non-contractual amount that we'd be accepting under this bill.
Representative Spear.
Thank you. So you mentioned that you have Medicare folks that you deal with. So 725 is not going to touch that because we have no, and Medicaid is also something different, so we're not going to touch that. Of the folks that are actually on fully insured plans that are registered in New Hampshire, how many of them actually have contracts with the ambulance providers? You know, do you have a
I
percentage
can only
idea?
speak for ourselves. I can't speak for everyone else, but I know
Just for
we're
yourself.
not actually contracted with any of the insurance companies. So, and it is because when you go to negotiate for the contract prices, they're not the negotiation is not an adequate reimbursement. So unfortunately, we're left with accepting the amount that they'll pay now, and then in turn, the balance goes to the insured.
Okay,
which
so
sometimes
typically
gets
you
paid and
don't have
sometimes-
contracts.
Right.
Okay, thank you.
Representative Walz.
Thank you, Mr. Chairman, and thank you for testifying. I was wondering if you could just clarify something, sir. You had said at the beginning that your 2009-11 calls and that you don't utilize taxes. And then later you said you're going to build towns. So I just needed to understand, is that because when you first started, because you're only have done this for 2 years, or
These are contractual towns that we have contracts with.
Mhm.
That's why they don't have a service, we're supplying that service.
Right, I understand that, but you had said you don't utilize taxes, but that when you bill a town, it's coming from the people's taxes, right?
Not using county taxes.
Yes, we're not using county taxes.
Okay, thank you. That's what I wanted.
However, as a startup model, we are running a deficit that is a liability due back to our general fund. So we are not outright billing through our taxes, and it's not our intention. It is our goal to pay back that liability to the general fund.
There are some people on the Finance Committee who will ensure that there will be no deficit to the county, that at the end of the day, whatever deficit is created is going to have to be billed by the towns that are participating.
And we believe we have a model. So, you know, but we're a startup, an emergency startup. Yeah. So, and the bottom line for us is what we're finding is that, you know, again, if we have a BLS emergency base rate of $1,800, and this is a true situation that occurred, and we have mileage that adds on another $177. That's a $1,977 that we're billing out, right? And through what we received back was $326.06. And what was interesting in this is one of those situations where the individual that went on got the notice that they were on the hook for $1,650, and they called and they pushed back and they pushed back, and guess what? We got a second bill, a second payment that was for $1,650.94, and they asked us that the insurer asked us to pay back the $326. So in reality, when it all comes down to it, we're at a tipping point, right? We're at a crisis, and I'm seeing it all over the place. I'm seeing it in our own communities where towns are trying to pay their bills, to pay their people, and this game doesn't help us. If they had just paid the $1,600 not the 1,900 that it cost, but the 1,600, we wouldn't be here today. We would be in a better situation. And we can show you the breakdown of all that.
Representative Spear.
Thank you. When you were talking about the numbers, you said, and you'll have to forgive me if I don't get it right, that you were getting some percentage from Medicare, and I think you said 23%?
22%.
Okay, 22%. And ERISA plans was another, some low
That's the
number.
breakout of the
We're
of the
talking about
clientele, not the.
Oh, no. This is actually in response to that same claim. We would have received a reimbursement of 22% from Medicare, but the patient would have been responsible for their coinsurance, and the coinsurance obviously is more reasonable under that. So you typically get the collection of the coinsurance when someone is under Medicare. No doubt, obviously Medicare pays a lot less than what this bill would recommend, but what the same claim, we're getting 16% reimbursed by the Blue Cross insurance, and the entire balance, because that's what balance billing does. There's no co-insurances anymore. The balance billing
Right,
basically
but
gives.
but you have no contract with the insurance companies typically, and with Medicare, you're only getting 23% back. I don't see how you can survive this way.
Well,
without
that's one of the reasons why we're having the conversations with our federal delegation. That's why.
But the problem I'm having, I think, and this is the problem I've had since last year on this, is the notion that 20% of the population is going to pay for the 80% that we can't touch and can't do anything about. And I can't get past that particular problem. The fact that in order for you to stay alive, you can't live with 23% reimbursement all the time. That's crazy. You're never going to make it. So if we're going to be upping the rate for the 20% of people that are fully insured in New Hampshire, which is only, as I say, only about 20% of the population, unless we overcharge, unless we overspend in that small group, it doesn't seem to add up that you can make it.
Would you believe?
Which
sorry?
is exactly why I think.
Fine, would you believe?
Which is exactly why we need to advocate for the federal government to pay more, so that in turn,
Yes.
what is being presented.
Really? We can't wait till the subcommittee? Representative Teresa.
So, pardon my ignorance on the billing aspect of the ambulance services, but my question is that, do we have some agency or a regulatory body or something? My question is that, is the services listed under ambulatory services, it is same from agency to agency? That means every agency in New Hampshire, do they cost the same amount of money for the same service? Do you have anything like that? Or you're set to, you can set your own prices?
We all set our own prices, and I think everyone has a different cost for doing business, but that is some of what was presented to this committee, or some of the research
Right.
is
Thank you.
presenting the information to help quantify our.
The other bill was, all those numbers were submitted to the department. Representative Gibbs.
Thank you. Does it seem reasonably likely that if this bill were to pass, and so you would receive for that proportion of the insurance plans that are covered by this bill, recognizing that a lot of them that we just can't touch, but for those that are covered by this bill, you would receive 325% of the Medicare rate. Does that seem reasonably likely to allow you to operate without consistently running a deficit?
I think that it's our belief that it's a piece of the puzzle to get to
Right.
that point where we need to be. The towns need to understand that are contractually obligated to us, that there's going to be a cost to it. We've got to work with our federal delegation. We've got to work with the state, state reps to see if we can do something about the Medicaid levels in the state. All those things need to all occur. And then there's there's other things that we need to take a look at, but at the end of the day, it's significant to us.
This legislation is not about solving the funding problem. Okay? At the end of the day, whoever municipality, the ambulance that's in that is going to get billed. Okay? And I would urge all of you, since we're doing property tax, we're doing, town meetings right now, is go look and see how much your town pays for the ambulance service. And that is a line item in every single town's budget.
Right.
Thank you very much.
Mr. Chairman.
Oh, I'm sorry, Representative McAleer has a question?
Thank you. Yes, just a real quick question. If Medicare pays you, what, 22% or 17%, if somebody has a supplemental plan, doesn't that plan kick in and give extra money?
If that supplemental plan covers the co-insurance, yes. So that's why typically payment or billings to Medicare, at least I think what we are experiencing, you tend to end up getting paid for the charge. It's when, because either there's a supplemental plan or the co-insurance is more reasonable for the patient to pay.
Thank you.
Okay, great. Oh, Representative Ammon has a.
I can't hold it. I'm sorry. Thank you, Mr. Chair. Thank you for your testimony. You mentioned that there's cases where a patient gets their balance bill, they get their bill, they submit it to their insurance company, and they end up getting reimbursed for that. I'm just wondering, could you put a notice on the bill that you send out instructing the person receiving it that they can do that so that more people do it?
So we actually have a third party billing company. We don't do it right out of our office, but when patients end up calling because they want to not acknowledge the bill, and again, I think sometimes the bill scares people away, so they just ignore it. But those that do call to say, hey, wow, that's when our billing agency does advocate that they advocate on their own to reach out to the insurance company to pay the balance.
And right now, when we've taken a look at that, it's about a quarter of those that are receiving it that are actually trying to take advantage of pushing back and appealing.
But and with our receivables, looking at those outstanding balances, the percentage of the claim that is due from the insurance is about 35% when it comes to Blue Cross Blue Shield, with the 65% being the responsibility of the patient. And that's the highest swing of the percentages that are due from insurance versus due from patient.
Thank you very much. And last but not least, Chris.
Mr. Chairman, I promise I will be exceedingly quick so as not to try the patience of the chair.
That's why I saved you for last.
Thank you. I really just wanted to testify because I'm not Anthem. Just a couple of quick points because
I want to tell everybody who you are with.
That is a salient point. Chris Kennedy, Vice President of External Relations for Centene and Ambetter Health Plans. Some of you may know us as a managed care organization that works with the Department of Health and Human Services to administer state Medicaid benefits, but we also have commercial plans exclusively on exchange in the individual market with approximately 25,000 policyholders. So we're not a big carrier in the market, and all of our members are individual policyholders. It's a very price sensitive market. So the cost ramifications of 325% escalation in the rate, floor really in the rate, could be very consequential to them. I will just also state that about 50% of our members already receive a federal subsidy towards their premium. So these are individuals who are very tenuous in terms of being able to afford their coverage. So 325% of Medicare would represent an exponential increase that could absolutely represent a barrier to access to coverage for our membership. And frankly, not just ours, but the other members on the individual market, including Harvard Pilgrim and Anthem, both have plans on the individual market. So yes, I think the 325% is a challenge. I also think 325% without the stick of requiring the providers to be in our network is problematic. You're setting a floor for the negotiating standpoint, but you're not requiring them to be in our network. And that deprives our members of the benefits of credentialing and quality standards that we hold network providers to. And we think that's pretty important. But the last thing I will say, and I'm going to be really quick, Mr. Chair, is I am going to make a plug for 316 because I happen to serve on the New Hampshire Health Plan Board, which is the quasi-governmental entity attached to the insurance department that procured the consultant I've been, if you haven't read the report from PCG, I encourage you to do so. It's about 45 pages. It's riveting stuff, but you know, it's actually really insightful because it is a real-time market analysis with cost impact of the kind of rate increases that they propose. And yes, they propose in that report a rate increase with some authority to the department to periodically review and even increase that rate further, contingent on real-time market dynamics. So, you know, I think that in fact, Mr. Chairman, if I'm not mistaken, that report was carried out at the directive, essentially, of this committee, an amendment that derived from this committee with resources allocated from the state. I think it would be a shame to waste all of that work. It was a fairly intensive and exhaustive report. It's really thorough and thoughtful. And frankly, I think it's the way we want to do public policy. Understand the cost impacts and market dynamics and then make our decision, right? Rather than hoping for the best. So with that, Mr. Chairman, I will.
Thank you very much, Mr. Kennedy. Okay, as it often happens, I say I have no more cards, and then one appears out of nowhere. And since he is a co-sponsor and was holding onto his card because he wanted to answer all the questions and all the problems.
You had to know it was coming.
But let's not go 5 minutes. Let's go 3 minutes because we have another one of your cohorts.
For the record, Mark Prue, Hillsborough 15, Manchester Ward 8. Yeah, I signed on as a co-sponsor, but didn't turn out the way I really wanted it to go. 325%? No, it will not keep us in the black. We can't survive on 325. Yes, we do bill. We bill for hazmat incidents, and I was just in a committee putting in $1,000 a day fine to the insurance company when they don't pay after 90 days. Shocking, the insurance company didn't want to pay. So on balance billing recovery, I think it depends a lot on your billing company. I actually work for Epping Fire Department. We run 3 ambulances. We have a very good billing company that recovers money from the insurance company, but also does a good job at balance billing. Clean claims. I mean, they look for any excuse. I was talking to another insurance company that Healthy Families rejected like 12 of their claims for small clerical errors and wouldn't let them resubmit. So on and on we go. You know, and I heard them say, well, we hate coming here arguing all the time. Well, if you stop stealing money from us when we send you the bill, if you paid it, we wouldn't be here. But still, you keep stealing money from the taxpayers and everybody else because you don't pay your bills. I still have trouble wrapping my head around that. How when you bill somebody, they don't pay. I go to jail if I do that. But they don't. And Anthem being reasonable in negotiations. And I just heard the last gentleman, if you're going to raise it to 325, we want to get you, they need to be in network so you can reduce the rate of the network rate below the 325, I'm guessing. But we need to make it so these companies can continue. You heard all these other speakers, how they're on the edge, right? I know my department, we're billing the taxpayers to supplement the service because we're not bringing enough in. And what are people going to do when especially the rural ambulances go out of business. Somebody's going to have to come in and cover them, and that's going to be a longer response time. Longer response times in critical cases equal death. No way around that. So that's what you're looking at, and I'm going to be brief this time. And I hope to see you in the subcommittee. Any questions?
Oh, Representative Miles has.
Thank you, Mr. Chairman. Could we at least agree that this is a step in the right direction?
A baby step,
Any step.
a baby step,
Thank you.
an infant step, neonatal.
Thank you very much.
You're welcome.
Having no more cards, I'm going to close the public hearing on House Bill 725. And I see the sponsors here for our next bill, so I want to move into it quickly so we still have a chance to get lunch. So I'd ask you folks to be as quiet as possible as you disappear. Keep your conversations out to the hallway. Okay. Shh. Representative Pearson, I'm opening up the public hearing. Public hearing on House Bill 434. And I'm sure we will see you Monday. Okay. Good afternoon. It was with great apology that went longer than I expected. I thought I was doing so well in terms of the hearing that because it was an issue we have had before, but unfortunately, yeah, there aren't too many people here. You got the guy representing domestic insurance company, so you get one property cat. You get two property casualties.
I just
three.
All right.
You got three there.
Oh yeah.
Or four.
Oh yeah.
Excuse me. You got them all now. You got them all.
All right. So for the record, Representative Steve Pearson, Rockingham District 13, which encompasses the town of Derry. Now, why on earth do you have this piece of legislation before you? Let me tell you a story, right? So a constituent of mine traversing down the road, broadsided a car backing out of their driveway. This was a very clear fault here on this. Okay. What do? This person, this constituent of mine, never been in a car accident. So they don't know what to do. The vehicle gets towed to a shop. The insurance company comes down and says, here you go, get a rental car. Because you got to be able to traverse the world. And that insurance company, the insurance company of the offending party, looked at the car, said, we're going to total it. That happens all the time. But here's where things went very wrong very fast. And this is on the shoulders of Liberty Mutual because they're the ones that did it. And I'll also, before I explain where this went wrong, I firsthand witnessed this. I was with the constituent. Their phone was on speaker for part of this, and I heard this with my own 2 ears. As soon as they totaled it, the threatening started. Oh, you've got to turn that rental car in right now. Right now. Because we've totaled your car. And oh, by the way, you've got to sign off on this total right now because for every day you wait, we're going to charge you storage fees for that car that we just totaled. Okay. Wow. So there's a little pressure there into forcing someone into an agreement on something they really know nothing about. But that rental car's got to come back now because we just totaled your vehicle. So you've got to turn that in now or you have to pay starting tomorrow. I heard that with my own 2 ears. Shocked at what I was hearing. that a person not at fault in an accident would be treated in such a manner and forced to do things under threat of them now having to pay out of pocket for something that they didn't cause. So that is the precipice of this, okay? When you own a single car and your car's just been destroyed, you have to have the ability to replace it. How do you do that when you're already freaked out? Thank God this person was not injured. You don't know what to do. You've never experienced this before. You've got an insurance carrier threatening you left and right that you're going to have to pay for all these things. And now you've got to come up with a way to buy a car now. So I think there needs to be a period here where folks can catch their breath and figure out what's going on. And how the hell do I get another car if I don't have a car to go get a new car? That's where this came from. Now, I'm going to pick on Liberty Mutual because they're the ones that were on the other line. That may not represent the tactics of other insurance companies. I would hope it doesn't represent the tactics of any insurance company, but it did. So that's why I sat down and tried to figure out what we can do here to prevent a predatory practice on our citizens that are at a massive disadvantage. So asking for 7 days to provide a rental car is not unreasonable. The fact that they even processed this entire claim out to determine a totaling of a vehicle and determining that all of the parameters they did in under a week, little impressive actually, that they're on their game that tight. But there has to be some reasonable thought here with these folks. And I think asking for them to provide 7 days of a rental car for someone to simply be able to try to put their life back together is not a tall tale. You know, it's not a tall ask, rather. It's not a significant burden. So that's the deal with this. That's where it came from, and I'm happy to take any questions you want.
Okay, make sure I understand. Was Liberty Mutual the policyholder, or was he the person who was in the accident?
They were the policyholder of the vehicle that caused the accident.
Okay, so this is the other.
Correct. Not
Other.
it was not the
So-
insurance company of the.
So it had nothing to do with uninsured because both parties were
Both parties were absolutely
fully
insured.
insured.
Yep.
Okay. Representative Spear.
Thank you. The policy that I have for my car has a line item that says in it, in the event of an accident and the car is destroyed in any way, manner, or form, regardless of what happens, I get a rental car. And I pay for that. And it's something like $2 a year or some such crazy little thing like that.
Mm-hmm.
We already have, I mean, that's something that you choose your insurance company by. I mean, you could say, well, that guy doesn't offer it, but this guy does, so I'll go with this guy. Are we legislating because somebody doesn't understand the insurance market? And I have an example that's even more bizarre than yours. My car was eaten by mice.
Not bizarre.
Okay.
It is fun.
But that's
So let me focus on what you actually asked me, the first part. So again, if you take out a policy and you don't cover yourself for a rental car because you screwed up, right? You caused an accident in some manner, that's on you. But this piece of legislation states that when you are not at fault, you're going to get the coverage from the other company for 7 days. To no fault of your own here.
Obviously, we're going to get into the nitty-gritty of the situation. We'll have a subcommittee and figure this one out. Yes. Okay, Representative McAleer.
Thank you. Just why didn't this person go to their own insurance company did they have car rental insurance on their own policy?
They did not.
They had a choice.
Representative Teresa.
Hold on a second. They had a choice, but they also had a choice not to get to be in an accident that was not their fault as well. No, they didn't make the mistake. They didn't initiate the accident here. That's the difference with this. This isn't a blanket coverage concept here. This has to do with the at-fault carrier, not both of them.
Got it. Representative Teresa.
So are you saying that if the car is damaged and goes to the shop, then typically insurance company pays for 15 days or 30 days, depending on the policy, if the car goes to the shop, but if the car is totaled, the insurance company do not pay it? Is that a standard in insurance companies? So you're saying?
I can't answer to standardization or the specifics of that, but if this car had to have been repaired instead of just totaled, he would have had a rental car for the entire duration of the time it took to have the car repaired.
I'm aware of that, but are you saying that in case of
Further
total,
question?
they don't give it? That they don't cover it if it's totaled at all?
Apparently they don't.
Okay, thank you.
Okay. Thank you very much.
Thank you, Mr. Chair. Thank you for your time.
Chair calls on Emily Dory for the New Hampshire Department of Insurance. We don't get Fox today? We like you
hello.
better.
Good afternoon. My name is Emily Doherty. I'm the property and casualty attorney at the New Hampshire Insurance Department. The department has reviewed this bill, and before I go into the details about the bill, I would just, as an initial matter, I would just like to address some of the points that were made about the consumer that were raised.
Yeah.
I'm sorry. Can you hear me better now?
Yeah,
Okay.
keep it close.
Okay. All right. Sorry about that. I just want to initially address some of the other, some of the initial points that were just raised in the testimony that we just heard. I would just, as an initial matter, just encourage anybody who's experiencing difficulties like that with a claim to reach out to the insurance department. We have a consumer division. We have the ability to process complaints. So if somebody's having difficulties with a claim, as was just mentioned, just described, I would encourage anyone going through that to reach out to us, to our consumer affairs, to our consumer services division, and file a complaint or an inquiry, because we will look at matters such as that, where there seems to be an issue in the processing of the claim. Getting into this bill, as I understand this bill, it seeks to add mandatory rental coverage in instances where there's been an at-fault accident. I would note that we don't have a lot of mandatory coverages in auto insurance currently, so this would be somewhat different than what we currently have. And on top of that, I would also mention that currently in our administrative rules, there's a claim settlement rule, insurance rule, INS 1000. The part of the rule that pertains to P&C insurance, to property and casualty insurance, is 1002. And within that rule in 1002-15, there's a provision regarding total loss rental coverage already. The department is currently reviewing that rule as the rule is set to expire. So we're currently reviewing that rule. It'll go for public hearing. But that rule currently requires that in instances where a claimant is making a claim for total loss, that at least 5 days of rental coverage be provided to the claimant after an equitable settlement offer has been made consistent with the unfair insurance trade practice law. So to that extent, this law isn't necessary. We are currently reviewing that rule as it is set to expire. So we're currently in the process of reviewing that. There'll be hearings on that. I would also mention that in just generally, even though that isn't directly the issue here, that there's also a rule in that set of rules, 1002-13, that pertains to rental coverage for claimants where there's been where the car needs to be repaired, and the claimant has made a claim against the at-fault party. Under that, the claimant is provided rental for like kind and quality vehicle for the duration of the repair. As long as if there's no delay by the claimant, and the claimant is entitled to repair during the repair process. There is rental issues already addressed in the administrative rules for the insurance department. And also going back to the 1,215 total loss rule, that also does address the issue for insureds who have rental coverage, and says they have to be at least provided the amount of coverage they have under their policy. We have some general concerns about this bill. The 7 days may in some instances not be enough to settle a claim. Sometimes claims take longer, so it could inadvertently provide less rental coverage than is needed. And then also the bill says that the rental must be from a regional or national carrier. We just note that sometimes consumers rent vehicles from other sources, such as the repair shop, or there's other options now in the out there in the commerce. And then also some of the phraseology, total coverage, I think that would need clarity. We're not quite sure what that would mean. Just as, again, typically under the law currently, claimants receive vehicles of like kind and quality from what they have. And typically for insureds, there's provisions also, maybe a dollar amount that the insured is allowed per day under the rental coverage under their policy. So there's just some things that would need to be looked at for that. And then typically also for insureds who have insurance coverage for rental coverage under their policy, and that typically is provided regardless of fault. It's just whether they have coverage for it or not, whether they purchased it. And then lastly, I would just say that to the extent that this is put into statute, that, potentially looking to put it in one of the statutes that already pertains to property and casualty, RSA 412, may be a better place to put it, as opposed to into these right now. This is being proposed to put into the Department of Safety's rules. We are happy to work with the sponsor and to look at this issue further. As I said, we are currently looking at the claim settlement rule that pertains to rental coverage. So we're looking at the whole rule, as the rule is set to expire. So we're in the process of looking at all the rules in 1002, and we're happy to work with the sponsor to discuss these issues.
Not that I know a lot about auto insurance, because I haven't gotten too many accidents. But my experience, many years ago, I had an accident in which it was 50-50. Who was the fault, 50-50. But other than that, if we're in an accident and it's clearly the other guy's fault, the other guy pulled out and hit the car, why would I be talking to the other person's insurance company at all? I should be talking to my insurance company, and my insurance company should be the one that's negotiating this total issue. In other words, isn't it my insurance company will decide whether they agree that it should be totaled? Or and if I understand the situation correctly, we're looking at the other party's insurance appraiser telling someone else, insurance, said, this is what you're got to do. And I'm going, no, my insurance is with my insurance company, and isn't it their job to negotiate the settlement with this other car, with the car, and if it's totaled, and isn't it their obligation to say, okay, by the way, you're going to have to provide, a rental car, or whatever. I guess if a car's once it's been totaled, but in my mind, these decisions are not made that quickly when it's two different insurance companies involved. Am I misunderstanding the situation?
The amount of time it takes to determine whether the car needs to be totaled can vary. There's a lot of factors that can come into play. Sometimes, it depends on the severity of the accident, the age of the vehicle, what was damaged. And in terms of the processing of the claim, some people choose, if they have, choose to go through their own carrier, if they have property damage coverage under their policy. But some people, even if they have that coverage, may choose to try to go through the other person's insurance company. It really is a personal decision to some extent, but there is, often, as you're mentioning, back and forth between the carriers as the carriers investigate who's at fault for the accident, who's responsible for the accident. So there is sometimes back and forth. I don't know if that answers your question.
Okay. Well, I learn more about it. Representative Spear.
You mentioned before that, if somebody runs into a problem with insurance, that they should contact the insurance department.
Yes.
Have you seen cases where an insurance company, as their initial tactic, will say, no, I'm not going to do that. I'm not going to cover you for whatever reason. And then maybe after you folks get involved in it, they have to do what they have to do.
Well,
Have you seen cases like that?
I'm sorry. We have, as I mentioned, we have the consumer services division that handles consumer complaints, and those come in for a variety of reasons that consumers have questions or they have a concern about the way that their claim is processed. So it could be for a variety of reasons. But the insurance department looks at those complaints to see whether there's been whether the insurance company has acted in compliance with the regulatory laws that govern the insurance companies. So we look at it from that. So there can be a number of reasons why consumers complain relative to auto claims.
Thank you very much. I have one card left. Mike McLaughlin, representing Allstate. I guess you're the sacrificial lamb here for opposition.
Good morning, Mr. Chairman and members of the committee. My name is Mike McLaughlin. I'm a lawyer and lobbyist in Concord, representing Allstate Insurance. And unlike the chairman, I do have great experience in wrecking cars and making claims. I think what we've seen this morning is a conflation of two issues. One is the at-fault party own insurance, and the other is you hit somebody who is completely at fault, and then the decision is to go to your insurance to go to their insurance. So if you have comprehensive collision liability in that type of situation, many people just go to their own insurance and suffer the $500 deductible, which they'll get back on subrogation. When you look at an automobile accident, you have damages. And damages include loss of property, physical injury, and loss of use of the car. So when you're looking at that third-party insurance company, whether it be Mutual, whatever it's Liberty Mutual or XYZ, you have a claim for all of your damages, including loss of use of that vehicle. The fact that Liberty Mutual, as the at-fault party, would not pay for the automatic rental for that person who was hit is not unusual, because there's so many things that have to be sorted out before they accept responsibility. But if you're uninsured, again, you still have the same claim against that third party. Again, the system is not lightning fast, but you're not going to get an automatic payment from a third-party insurance company just because you asked them. If you look at the bill, there's also, I think, some drafting issues. Was not at fault. I mean, we have a comparative negligence state, so the determination of at fault is something that really is not automatic. I mean, the police report may put it in, but the accidents I've had, they hesitate to try to make a conclusion. Or a police report, or reported by the decision of an insurance company. I don't know what a reported decision is. I've never seen an insurance company report their decisions to anybody, and most of them will simply the facts will stand and you'll either go to court or not. But again, the mixing of the two issues, the third party who hits you, if you don't have insurance, you do have your damages claim. And it may take some time to get it, but they're not going to just turn around and give you benefits until this is all sorted out. But again, if you have your own insurance policy, your company will collect on that rental that you have under subrogation. Your damages include, again, property, physical, all those different things. And the bill is an idea to solve a problem that may exist, but I don't think this solves the problem. It just it confuses everybody, including me and some of the people on the committee, about how we're going to make a third-party insurance company immediately react when the facts of the accident become quite convoluted. But it's a mix. It's a mix of two sides of the question. If you have insurance, you have great insurance. You have a comprehensive, your liability, you're going to be fine. If you don't have insurance at all, again, you still have the same claim against that third party. But it's just not going to happen even under this bill.
I think I got it. Representative Teresa.
So, thanks for taking a question. So far, what you said is basically the time taken between resolving who is at fault, not at fault, and the administrative processing time. But would you agree that at the end, the insurance company is going, if it's at fault, they are going to pay for the vehicle if it's totaled? Or like the person said, he was not paid at all. I mean, what is the current policy or current standard, or does it differ by insurance to insurance company and their policies?
I apologize. I really.
Well, the question, okay, let me just simplify it. Are you, besides the fact that it takes time to process it, at the end of the day, when it's processed, would you agree that the insurance company does pay for the claimant in the event of total loss of the vehicle?
In the scenario that the sponsor presented, Liberty Mutual will end up paying for the damages to that person. Now, it may take that person having filed a suit, but believe me, as a lawyer, there's plenty of people out there who will take that.
Will damage also include paying for rental vehicle? That is what was raised.
That rental will be part of your claim damages. You would claim loss of use of the car if you got whiplash. If you got...
So the answer
Thank
is
you.
yes, they would get paid.
Yes.
But over time.
Yeah, okay. Thank you.
So now I'm kind of looking at the sponsor and say, could this have been what happened? Could it have been because the policyholder did not have car coverage in their policy, rental car? Then when they said to their insurance company, because I hear the story is that, you know, regardless of whose fault or not fault, they send you the check as quick as like a jackrabbit. They want to send you the check. Sometimes it's too much, too little, right? And you don't necessarily want to
You mean
take
under your
it.
own comprehensive.
Okay, and but is if the person had the car rental in their policy, then their insurance company absolutely would have said, fine, we'll take care of this and we'll get our money back once the case has been settled. But if he didn't have that in his policy, the insurance company says you didn't claim it, so we're not going to cover that. We'll have to wait until the case is settled and the other party does admit that they're fully responsible. The other insurance company takes the full responsibility and says it's a total. And at that point in time, the original policy holder, I guess, would then hand the bill for the car rental to
Yeah. As a
Liberty
matter of
Mutual?
fact, what happens many times is an adjuster will come out and say to you, okay, we totaled your car, it's $15,000. What else do you have to claim? Well, you broke my antique vase, was in the front seat. I rented the car for 2 weeks, it was $1,300. Okay, we'll give you $25,000. So that third party adjuster representing, say, Liberty Mutual will come to you and say, okay, let's finish
make a
this thing
settle.
off.
Try to make a settlement
Right.
then. Usually it's too low.
Well, it's usually fair. But again, there is a process where the innocent third party will be approached by the carrier who has a 100% at-fault driver, and they will attempt to settle the thing as fast as, settle the thing quickly.
Right.
But if the person who is not at fault does not want to accept that settlement offer, then they get into the details of how do I now recover, which is either, I guess, hiring a lawyer and suing Mr. X, who is insured by Mutual of Omaha, whoever it might be, to get all those damages. But again, it's a contractual issue, as Representative McCleary said before. When you look at the contract, you get what the contract calls for. Now, because you don't have it in your contract, doesn't give you a leap over to the other side to automatically get that benefit. You have to, a lot of people with older cars only buy liability insurance. The car is not worth the premium to have it repaired.
I got a couple.
Well, it's a
I got a
sub.
couple old sobs.
They
Yes.
can't even get parts for subs anymore. But so it's a the thought that somebody's been negatively impacted by that particular scenario with those facts is probably happens more than we want to admit. But again, the process is available for that person to get 100% recovery. Again, they have to go through the process.
Okay. Wait till the subcommittee. We'll figure it. Okay, well, go ahead. Ask the question.
Thank you.
I'm not too hungry.
Now I'm intimidated. Now I don't know what to do. Have you seen cases? We talked about what if I don't have liability insurance and I'm not the at-fault person, but there are also cases where, and I know of these cases, where I don't want my insurance company involved because I don't want my rates to go up. So I'm going to try to deal only with the at-fault person who is the other insurance company. Do you see those kinds of cases?
Oh, sure. Sure,
So
there's
the-
some people just want to pay out of pocket so they don't have to make a claim because what's that little fox who does all the Carfax things? You have the Carfax information comes from the repair facilities. So yeah, if you're sitting there and you've got 100% the guy, as in the scenario, somebody backs right into you, and you say the last thing I want to do is contact Liberty Mutual and tell them I got a claim. So you say that insurance company X, what is it going to take to get this thing settled? And again, if the injustice says, here's $5, you're going to no, I can't do that. And you need that, then you need some coverage, you'll go back to your company. But initially, some people don't go to their own company for the very reason of the history on the car and the, it's more convenient, or they feel less that they're going to get hit with, right? But 100%, if you're 100% innocent, which is kind of up back, if you're not at fault, your rates don't go up, he said.
I've always said that the best thing you can have is if you get in an auto accident and the other person's at fault, just hope they don't have insurance, because that way you don't have to deal with their insurance company at all. It's just your own. Okay, with that, thank you very much. And I will close the public hearing. This will go to a subcommittee. And let's try to be back here at, well, yeah, I guess 1:30. Yeah, sure. Yeah. So right now it's 1:15. Yeah. Okay. We'll say with their health insurance, when
damages to that person. Now, it may take that person having filed a suit
Mr. Chairman is on his way back from lunch. We will be starting momentarily.
Need a clerk now. Temp clerk. You want a clerk? Yeah. Okay, cool.
She's the prime.
507. What are we doing? They switch sides. I know.
Okay, we'll open up the public hearing in House Bill 507 and hear from the prime sponsor, Representative Gregg. I apologize for our delay.
That's okay. It gets busy. Good afternoon, Chairman Hunt and committee. It's nice to see you all again. For the record, I'm Representative Alicia Gregg. I represent Hillsborough District 7, which is in Nashua. I'm pleased to be before you today to testify in support of House Bill 507 relative to the timeline for credentialing of mental health providers. For several years now, we have all heard about the serious challenges our state faces in ensuring adequate and timely mental and behavioral health care services are available for our citizens. Both parties have taken important steps to address these challenges, but much work remains before us. In September of 2024, a report from the New Hampshire Behavioral Health Workforce Center at Dartmouth Health noted that workforce shortages in New Hampshire's behavioral health care sector have reached alarming levels and have stayed at those levels for nearly a decade. Despite heroic efforts from leaders of from all sectors, many individuals in New Hampshire who are in clear need of behavioral health support are not getting sufficient help. More recently, Roland Lamy, Executive Director of the New Hampshire Community Behavioral Health Association, noted, "A lack of mental health professionals makes it difficult for patients to access mental health services." There is no one way to solve this challenge. It will take several approaches. One of these ways that we can do it is with the House Bill 507, which requires health carriers to process credentialing applications by mental health providers within 30 days of submission to a complete application. This bill helps to address a bottleneck with onboarding mental health providers, which can take months at times. The current law requires health carriers to credential primary care physicians within 30 days of receiving an application. And the bill would extend that requirement to mental health providers, with carriers required to cover health care services and treatments as in-network retroactively from the date of credentialing application submission by the provider. In her inaugural address just a few weeks ago, Governor Ayotte noted, "As I've traveled across New Hampshire, I have heard firsthand about the urgent need to improve our mental health care system. There are not enough providers." House Bill 507 will help to address this challenge by quickening the pace at which mental health providers are onboarded in New Hampshire, holding health carriers to the same standards for credentialing mental health providers as they currently are for primary care physicians. As Governor Ayotte concluded when addressing behavioral health during her inaugural speech, seeking care for your mental health is just as important as going to the doctor when you're feeling sick or dealing with a physical injury. We all need to work together on this and take care of each other. I appreciate your time today. I'm happy to try to answer some questions, but I do know that someone from LifeStance Health is here, and they'll be able to testify more to the particulars.
So, make sure I understand, because I'm reading the bill, and it looks like this is already law. Right? I mean, 30 calendar days. What is it about these little boldface and moving specialists from one place to the other? What makes this bill necessary? as compared to what's going on in the current law?
Sure. Well, we already have it for primary care physicians. That's within 30 days. This is adding mental health care providers. Currently, that is not in statute, that it's within 30 days.
Oh, is it?
I see no reason that we can't also do
I
that.
see primary care and mental health providers.
Yes.
I see. Okay. I just wasn't seeing it.
Sure.
Okay. Question, Representative Burrows.
Thanks for taking my question, which is, if I can pull this over. Do you think that when I'm looking at the 30 days, do you think that maybe there's a distinction between, you talked about clean applications between that, and I would categorize them as low, medium, and high risk applicants? Because beyond the clinical, I mean, it says here quality and clinical, there's other factors. I mean, some people, there may be a criminal record. Maybe the person did residencies in another country. Do you see situations where it could take more than 30 days?
Thank you for your question. I appreciate that. I think that there are always extenuating circumstances. However, I don't feel that this is any different than a primary care provider. And if they've already been able to, it's been proven that they can do that within 30 days with the primary care. I see no reason why we can't open this up to mental health. I started looking at mental health bottlenecks a couple years ago because we do have so many. It's been very challenging to get providers. So it's where is that hiccup? And part of it is that it takes so long in this state currently to get that licensing and credentialing. So I know that they're very thorough. They make sure about the, criminal background and all that, but we just have areas where we've either over legislated and kind of held the mental health care into a certain area, or in this case, we're kind of letting it fledgling out there and not holding it to the same, importance that we are primary care providers.
Further question, Main Inquirer.
Would you believe, this is a would you believe not question. Looking around the country, there are so many cases of poor credentialing that has ended up poorly for the patient. So I would just suggest there are probably some for both for physicians and for mental health care providers where it makes sense to slow down. Thanks.
Would you believe? I know you did. Twice. This was a would you believe. Okay. Thank you very much for your testimony.
Thank you so much.
Chair will call Commissioner's here. It's also Alex and Michelle. You guys going to come up at the same time, or are you going to treat them? Come on down.
We missed you, Mr. Chairman. It had been too long since we were here this morning. We just had to come back.
Just can't stay away.
Appreciate it very much. DJ Betancourt, Insurance Commissioner, Michelle Heaton, the head of our Life and Health Division. So broadly speaking, Mr. Chairman, we are in support of what the sponsor is trying to achieve in this bill. I think she raised some of the important points with respect to getting sufficient workforce in place to deal with the demand for mental health services that is currently in the state. My understanding in some of the private conversations that I've had with the carriers is that they can live with, including the mental health professionals, in the 30-day window, along with the PCPs, primary care professionals. To your point, Representative Burrows, remember that the carrier always has the ability, should there be something in the credentialing process that flags, to deny credentialing. If there's a criminal record or there's some other reason that the carrier feels this individual should not be credentialed to be in network with them. I'll point out a couple of different things just that I hope are helpful for you in terms of background as it pertains to credentialing. So when credentialing first came into existence, when the legislature first implemented credentialing, it was intended as a quality of service measure. It was a measure that ensured that individuals were getting the appropriate care from professionals who were qualified and experienced and educated to be able to render those services, that you were not just having people get services from fly-by-night individuals. Over time, however, what we have seen is the credentialing process be viewed and, in certain circumstances, experienced by providers as something of a barrier to their ability to be able to practice. Now, I think the state over the past several years has taken a number of steps to address the workforce challenges that the state has, particularly as it pertains to behavioral health as well as other professions. And I'm speaking of things like the licensure reciprocity reforms that you've brought forward, trying to eliminate some of those barriers from people being able to enter the workforce. I think the first half of this bill achieves a bit of a balance between preserving the quality of care, ensuring that people are accessing a well-qualified, appropriate provider, while ensuring that it is not an impediment for that individual to be able to start taking patients and bill and all of the things that are important for that individual, for that professional. The second half of the bill, and I have indicated this to a representative from LifeStance who approached us about our thoughts on this bill, the second half of it is a bit problematic. And the reason that it is problematic is because, you know, at the end of the day, when we hear from providers about the pain points that they're having, yes, credentialing can sometimes be a source of irritation and agitation, to be sure. But the biggest challenge they have, the biggest frustration they have, is in the contracting process. And sometimes the credentialing and the contracting process are simultaneous. And exactly how that unfolds is a little bit different carrier to carrier. For example, I know that there is one carrier who will not begin the credentialing process until they have reached an agreement, have a contract in hand with that provider for them to be in network. Once that is in place, then they'll begin the credentialing process. And so there's no friction between the credentialing and the negotiation piece. Another carrier does credentialing and contracting simultaneously at the same time. And that, I think, is where one of the more obvious hiccups with that second section arises, in the sense that, okay, the individual's credentialed in the 30 days, you're giving them this ability to retroactively bill, but retroactively bill to what? Because they don't have a contract in place. They haven't agreed upon the rates. So that, I don't know how that works for that particular reason. So what I have said to some of the supporters of the legislation is, we will engage heavily with the committee during the subcommittee process, and we will see if there is some workable language to address that second piece. But in terms of the first section, I think that's fairly straightforward. I don't know that that needs too much work. And again, I think you've got some consensus that the carriers can live with that. And so, again, if we're able to speed up that process to get those professionals into the workforce, taking clients, helping people, I think we're all in support of that. And again, it's the right balance, because you're not junking the credentialing process altogether. You're just expediting that. And again, if there are issues that come up, the carrier always retains the ability to deny the credential. Before I take your questions, I'll look to Michelle. Is there anything you got to clean up?
No.
I guess I did all right on that one. Thank you, Mr. Chairman. Happy to take questions.
We do. Representative Pentusek.
Thank you, Mr. Chair. Thank you, Commissioner, for taking my question. I'm trying to wrap my hand around what you were saying about the company will have a agreement with the provider, even though they have not qualified the provider. That, in my head, says this insurance company now has a contract with an unqualified provider, which is not good for the general public. Would you believe?
I these days I'll believe darn near anything. But what I would say is typically how it works, and again, Michelle can correct me if I'm mistaken, there will be a provision within that contract that stipulates that the individual must be credentialed in order for the contract to go into effect. So they'll have the contract in terms of the negotiated rates and the billing codes and all of that stuff, but it will also say all of this is contingent upon the individual being successfully credentialed.
Thank you.
Representative Burrows.
Thank you. Thank you for taking my question. Do you think it would make sense to have just a clause in there to say that it could go beyond 30 days if there were extenuating circumstances, like somebody's records didn't come back from overseas or just something like that?
I think there is flexibility, but I'm going to defer to Michelle on those specifics.
So the current statute requires a clean application, and the clean application, the definition of that is that they have everything they need to make that decision. So if they needed additional information, that they would request that information, that kind of stops the clock.
Okay.
I think the way the statute is currently written, there is no way to get around those time limits. And just to clarify too, the 45 days is for specialists, and currently mental health providers would fall under that 45 days. So it's not that under the current statute, there are no time limitations. It's just they would fall into the 45-day bucket as opposed to 30 days.
Great, thank you.
Representative Pacelli.
Thank you for taking my question. If you don't have this metric now, perhaps we can have it for the subcommittee, but I'm wondering how big of a problem this is. So do we know out of X number of mental health providers that have been credentialed, how many take longer than, this 45 days? And because I'm wondering if this is a problem or if it might be not really addressing what the critical aspect is.
So I would say that certainly from the perspective of the providers, there's a problem. And so when they come to me and ask me about what's going on and they're raising these concerns, it obviously becomes a problem for me. But what I would say is the reason that credentialing is a problem is different for different providers. Some of them don't fully appreciate the concept of the clean application, and they didn't appreciate that they needed a number of different other pieces of information to be included in that. So sometimes it's just a matter of being able to clarify that situation for them. In other cases, the carriers have taken longer than they should, and we obviously address that with the carriers. But there are a number of different issues that can come up. And it's different, as I've said, for every provider, but it is a bit of a problem. And as I've said, what I don't want to see is for there to be a groundswell of frustration with credentialing potentially being an impediment to getting folks into the workforce to deal with the mental health demands of the state, such that we start having conversations about why we need credentialing in the first place, which, as I've said, is an important safety measure that's in place. So what we're trying to do is bring forward, I think, what we see here is the opportunity for there to be a safe and pragmatic compromise that preserves credentialing, but also ensures that it's not an impediment to workforce being able to come in. Michelle, are there other problems with credentialing that should be highlighted that we hear from providers about?
We don't necessarily have data with respect to what you were asking for, because it's not necessarily clean cut. It's not part of any of the data submissions that we routinely get data on. But there are a lot of misconceptions between the credentialing date and the contracting date. And that's, I think, a common thing that people get hung up on, and they think just because their credentialing is complete, that means that they should be able to bill, but they don't necessarily have a contract. And there are no time limits for contracting, because at the end of the day, it's up to the parties to come to an agreement. And sometimes those contract negotiations can take a prolonged period of time.
Representative Miles.
Thank you, Mr. Chairman. Thank you for taking my question. For the benefit of the committee and the viewers at home, and if I'm directing this question to the wrong person, please correct me. Would you be able to explain how this bill would be beneficial to decreasing the congestion in emergency departments around the state?
Boy, that's a complicated question to a very serious challenge the state has. Let me answer it this way. As a matter of kind of philosophy, I guess, my belief is that if we are able to get individuals into behavioral health treatment in less acute settings, that's always better. You're not having a situation where the individual can't get access to a therapist or somebody who can engage in intensive talk therapy or the other services that these behavioral health counselors and providers give. If the individual can't access those services, then their problem is going to compound. It's going to get worse until you reach the breaking point in which the individual then needs to access the ER. And obviously, you are all familiar with the fact that the process, and it's certainly better than it was several years ago, but the process of getting people into New Hampshire Hospital is sometimes challenging. Lack of beds, the fact that before individuals would be in New Hampshire Hospital and would have to stay there for longer periods of time because we hadn't really stood up a lot of the step down services for an individual who was leaving New Hampshire Hospital, to not just have it be a situation where they were discharged from New Hampshire Hospital and the attitude was basically goodbye, good luck, you're all set. Well, no, that individual needed that follow-on care. And again, I think the state has done a good job of investing in those step down services so that it's not just this revolving door of an individual being in the ER, into New Hampshire Hospital, back home, back to the ER, and away and away and away it goes. So I think, again, anytime you can bring more capacity to some of those less acute services to try to deal with the individual's challenge before it reaches the point where they need to access an acute care setting is always a good thing. Do we have statistics and hard data on that? I don't. But that is my fundamental belief.
Very small follow-up.
Okay.
I am under the impression, and please, would you believe, that I think this bill will help in the actual congestion for patients who are already sitting in the ED waiting for an evaluation and can't get one in a timely manner, meaning not even in 24 hours. They're sitting there waiting for a qualified mental health evaluator to be available to come and see them. Else they're stuck in that department for who knows, weeks sometimes.
Without a doubt. I think it certainly has the potential to help. I think the biggest barriers in that process are, and again, it depends on the nature of why the individual is there. If there's an IEA process, then you're going to have to wait, obviously, for there to be a judicial hearing on that. And again, fundamentally, a lot of the folks who are in those ERs need access to New Hampshire Hospital. But to your point, if there's the ability for somebody to be able to get in there and evaluate that person, and they determine that they don't need the New Hampshire Hospital level of care, well, then we can move that individual out of the ER and on a pathway toward whatever less acute options are available to address their particular issue.
Thank you.
Okay.
Thank you, Mr. Chairman.
Rebecca Sartor from Lifestance Health.
Sartor.
Good afternoon, Mr. Chairman and honorable committee members. Thank you so much for giving me the opportunity to speak today. I am Rebecca Sartor. I'm a Senior Operations Director for Lifestance Health, overseeing our practices in New Hampshire and Maine. And I'm also a licensed independent clinical social worker in New Hampshire. I have practiced in New Hampshire for about 25 years now in inpatient, outpatient, community mental health, as well as outpatient private practice. Lifestance Health, just for some context, is one of the largest behavioral health providers in the state of New Hampshire. We employ over 210 clinicians, and we have 13 locations. In 2024, we treated almost 27,000 New Hampshire residents through 264,000 visits. So we are very committed to improving access to behavioral health in New Hampshire. I'm here to testify today in support of House Bill 507 relative to the timeline of credentialing. We've experienced the high demand for behavioral health care services, which have skyrocketed, particularly in the last 5 years, and the workforce has had trouble keeping up with the demand. The bill today before you requires insurance to process credentialing applications by mental health providers within the 30 days from a clean application. This is important at times because historically those credentialing timelines could be 60, 90, and upwards of 120 days in the past that we've experienced, which is slowing down the process and a direct barrier to access. Currently, as reflected, the law requires insurance to credential PCPs within the 30 days. This bill would extend that requirement to mental health providers, with carriers required to cover healthcare services and treatments as in-network retroactively from the date of credentialing application. The retroactive billing provision is very similar to what is permitted by Medicare through the credentialing process and sets the effective billing date as the date of the clean application being received. Taken together, the provisions of Health Bill 507 will address the challenges posed by greater need for behavioral health services by quickening the pace at which mental health providers are onboarding in New Hampshire, holding health carriers to the same standards for credentialing for mental health providers as for primary care physicians, and allowing those providers to bill retroactively at the time of application once credentialed. And I'm happy to try to answer any questions you may have. Thank you.
Guess we're all set.
All right. Thank you very much.
Thank you. Chair will call on Peter Bragdon from Harvard Pilgrim, who he's in between.
Why?
You're not opposed, not support. He's he's a tweener.
On both bills today. I wasn't really in support or against, so I just kind of put in between. So thank you, Mr. Chairman. For the record, I'm a middle child, by the way. So for the record, Peter Bragdon, Senior Policy Advisor with Harvard Pilgrim, with Pretty Strategies, also a recovering legislator, and here today, I think for the first time this year, representing Harvard Pilgrim Healthcare. Harvard Pilgrim Healthcare is a not-for-profit insurance company serving 50,000 of our friends and neighbors in New Hampshire. We operate in 4 states, Maine, New Hampshire, Massachusetts, and Rhode Island. And here on specifically House Bill 507, I believe has been stated before, like other carriers, no particular concern with the first part of the bill, the 30-day limit, as we do for the PCPs. That's something we strive to do anyways, so it's not really a problem there. There is an issue that we would have, though, with Section 2 of the bill, the one that talks about the retroactivity. And it's kind of been hinted at and talked about a little bit that there's really 2 pieces in all this. There's the credentialing and there's the contracting. And they really both need to go together. But I'll also point out that Section 2 of this bill adds a Roman numeral 8 to the statute. It doesn't show you the rest of the statute, but Roman numeral 6, and I'm going to say this because I think Roman numeral 8 as proposed conflicts with Roman numeral 6. Roman numeral 6 says nothing in this section shall be construed to require a health carrier to select a healthcare professional as a participating provider solely because they meet the carrier's credentialing verification standards. So 8 says once you meet the standards, you should be able to retroactively be paid for all these things. And 6 says no, nothing says just because you're credentialed, you're actually part of the network and everything else. So it really needs both the credentialing and the contracting piece to be there. Although I would say that it may not be necessary at all because the contract's going to be negotiated. It's going to say when it starts and when it ends and what's covered. And so really any kind of statutory change is probably not necessary, but as it stands now, it conflicts with 6 and it doesn't take into consideration the fact that the contract has to be negotiated as well. And thank you. Be happy to answer any questions you might have.
Well, good.
Hey, look at that.
Perfect. Chair will call on Paula Rogers from AHIP, who is opposed to the bill.
May not have had my glasses on. Anyway, good afternoon, Chairman Hunt, members of the committee. I just want to be very brief. Pretty much my testimony is going to echo what Mr. Bragdon had to say. When I picked up the bill, I thought the first section was reasonable for a couple of reasons. The pressure on mental health and the provision of mental health care in the state, but also because we've made a big deal about integrating primary care with mental health. So it seemed to me that if the primary care provision is a 30-day provision, if you have a credentialed mental health worker ready to go to work, you contract with them, you should get that all done as soon as possible. So I didn't think the 30 days was an issue. I agree with Mr. Bragdon that the second section is problematic. One could be credentialed, and if you're an individual practitioner, you could actually start working. The real issue with the payer is you're not going to get paid unless you have a contract. And so obviously, to everyone's benefit, if we could credential and contract as quickly as possible, that would make the most sense. So I thought the change in paragraph 1 was perfectly fine. A little work on paragraph 2 to straighten that out, or maybe you could state the obvious, or maybe you could strike section 2.
Good.
Thank you.
We got one card left. Sabrina Dunlap.
I will also be very brief, but first I will introduce myself, Sabrina Dunlap, Senior Director of Government Relations for Anthem. Thank you for the opportunity to speak. We are opposed to the bill and share similar concerns that have already been raised. I would just add that 30 days, I think, is more aggressive than most states. I just wanted to point that out. And I think, Section 2, we would be in favor of striking that altogether, but certainly needs some work if it does stay in. So that is it. I'm happy to take any questions. Thank you for the opportunity to speak.
Representative Spear has a question.
Thank you. You mentioned that it's more aggressive than most states. What do most states have?
I can get that for you. I just checked with my team earlier and I didn't get the specific data, but it just was a comment on the bill when they reviewed it that it's a faster turnaround time than most states have. I'm guessing it's probably 45 for most, but that's just a guess.
Follow on?
Further question may inquire.
If a doctor, a primary care physician can get credentialed in 30 days, do you have any reason why a mental health care worker couldn't?
No, I don't, thank you for the question. I don't think it's an issue. And I think we also strive to get the process done faster than 45 days, which is the current law. My point was just in terms of state statutes on the issue. I think 30 days is a faster time than most states have. But I will double check on that.
Representative Miles.
Thank you. Very brief question. I just want to clarify. So the primary reason your Anthem is opposing this bill is because it would be on the cutting edge of timeframes for getting people credentialed?
Thank you for the question. I don't think that's the primary reason. I was just pointing it out as one of the reasons. Follow up?
Her original reason to be opposed was Section 2.
Thank you.
Yep.
Thank you.
Okay. Is there anybody else who would like to speak on Senate Bill 507? Seeing none, close the public hearing. And what time? Okay. We'll open up the public hearing on House Bill 705 and hear from the prime sponsor, Representative Ammon. Good afternoon, Representative.
Good afternoon, Mr. Chairman and the handsome and beautiful Commerce Committee. You know you made it to the big time when a department asks you to file a bill, so yay for me. So this bill is a request of the Insurance Department, and I'm just going to go through a little bit of testimony. I'm not an expert on the bill. It's basically a transparency bill and some rules around how to make information transparent. It aims to increase transparency in healthcare by requiring health carriers to disclose specific cost information regarding covered items and services under a health benefit plan. It applies to all health carriers operating in our state, including insurance companies and third-party administrators. These entities will be required to make publicly available certain information about the costs of covered items and services, including negotiated rates with in-network providers, out-of-network allowed amounts, and historical net prices for prescription drugs. The bill will improve transparency in several ways. First, it will provide consumers with access to accurate and up-to-date information about the costs of health care services, enabling them to make informed decisions about their care. Second, it will allow employers and individuals to compare prices across different health care plans and providers, promoting competition and driving down costs. And finally, it will enable researchers and policymakers to analyze market-wide data and identify trends and areas for improvement in our healthcare system. So by increasing transparency in healthcare costs, HB 705 will help to reduce surprise medical billing, decrease administrative burdens on providers potentially, and promote a more efficient and patient-centered healthcare system. So I request that you consider this bill, and I'm happy to work with you on it. Thank you. And any questions, I'll do my best.
Representative Burrows has a question.
Thanks, and thanks for taking my question, Representative. Let's see, it's on page, I think it's page 2, section 2. It says that is this on? Requirements for public disclosure in this subdivision apply to in-network provider rates. So I'm wondering why that's in there. Because if we're talking about insurance carriers, or am I misunderstanding it?
In-network provider rates?
Yeah.
I mean, it's just another piece of the information puzzle.
So it's line 24.
Yeah.
It's J21,
Page
Roman
2.
numeral 2.
On page 2?
Yeah. Okay, so you're still talking about the insurance there.
Insurance.
Okay, got
That's
it.
right.
Thank you.
So a couple of things in the bill that I found interesting, if I could point it out.
Of course.
Real quick. There's a lot of identifiers in there. As a database geek, that makes me happy. There's a lot of identifiers in there. On page 4, line 3, it says nothing in this paragraph requires the disclosure of information that would violate any applicable health information privacy law. And you'll see that it's there's an aggregation requirement of 20 claims. So there's some kind of aggregation that you can't drill down into. I found that interesting. And then page 5, line 4. So it talks about machine readable files. So there'll be data files publicly available on a website that anybody can access. That's the idea. The department, I believe it's through rules, the department would define what the structure of those data files would look like. But on page 5, line 4, those files could not prevent or will not prevent compliance with federal transparency and coverage requirements. So there is a federal law, I think President number 45 signed an executive order that created this, and eventually I've recently found out it's been codified into law, but it's the Federal Transparency and Coverage Regulation. So there's a federal counterpart to this. And then finally, page 5 again, line 24. Nothing in this subdivision alters or otherwise affects a health carrier's duty to comply with requirements under other applicable state or federal laws. So it'd be fully in compliant with state and federal laws.
Representative Burrows.
Thanks. Quick question, Representative. Where was I? Do you know if what's stated in here goes beyond what the federal law lays out in terms of transparency?
Does it go beyond? I think it's a complement to it. I think if my understanding, and maybe somebody coming behind me will have a better understanding, but
Ask Alex.
that it's a complementary to the federal process.
Okay, that might just something I'm curious about. Thanks.
Representative McAleer.
Thank you, Mr. Chairman. Thank you for taking my question. I'm a little confused here. I thought that health services had a whole bunch of different charges. I mean, they're different depending on who's paying the bill, who the payer is. How could you be transparent when you have a system like that?
Where it's Peter gets $10 and Paul gets $15 charged, right? I don't know. That could be in the data format. I'm not sure how they would do that.
Somebody's nodding back there. Maybe there.
It could be part of the data structure that that
All right,
identifies the source.
I'm still confused.
Yeah.
Hopefully Alex will clear it up for you.
One final thing. Another final thing. My final thing.
Final.
The fiscal note has all zeros, which I like to see. And in speaking with the department earlier, it'll potentially make data analysis easier. So it might make their job less difficult, and that might be a good thing. So with that, thank you.
Oh, we do have a question. Representative Sharisa.
Thanks for taking a question. So, as I understand, in the healthcare system, I have seen 3 different kinds of charges. One, charge for the service, and then second is the charges that insurance company pays for that service. That's different. And then third kind of charge, which somebody pays by cash. So there are 3 kind of billing amounts for the same service. Which charges are you referring here to publish?
Well, I don't think cash would be part of the data collection, so I would assume we would eliminate that one. It talks about negotiated rates, so I think it would be, whatever that rate would be.
By the insurance
As
company?
negotiated. Yeah, that the insurance company would pay. But again, I'm not a super expert on this, so maybe someone will answer that behind me.
Okay, I'll hold up.
Alex will answer that question
Yeah.
also.
All right,
Thank you very much. Chair will call on Alex Feldwebel from the New Hampshire Insurance Department. And Jason, okay. We didn't write him in, but okay.
Adam in.
Oh, okay. That sounds better. The essence of this bill, let me distribute my testimony too. Oh, I'll introduce myself one more time. I'm Alex Feldwebel. What's my title? Health Reform Instructor. That's since I retired and came back. That's what I'm.
How about
what I'm
retired
called.
deputy?
Yes. So the essence of this bill is that it codifies in state law the existing transparency and coverage federal regulation, which requires health insurance carriers to disclose on a public website, number one, the in-network negotiated rates that they have contracted for with in-network providers. Number two, their out-of-network billed charges and then the paid amount on those billed charges. And then number three, the negotiated rate and historical net price for prescription drugs. So it does pretty much as Representative Ammon described, everything but the uninsured cash consumer. This regulation was first promulgated in 2020 in response to an executive order from then President Trump in his first administration, and it was aimed at improving price and quality transparency in American healthcare. The intent is to make information available to the public and thereby drive innovation and support informed price-conscious decision-making and promote competition in the healthcare industry. The regulation requires health carriers to make available to the public, including stakeholders such as consumers, researchers, employers, and third-party developers, 3 separate machine-readable files. That means files posted on a website that can be read by a computer in a mechanized way. As you know, I just went through the 3 types of price information. There has to be 3 machine-readable files that are posted. So the carriers are doing this today. They are posting the information, but they are doing it in different formats and different styles of presentation, which has, in most part, had the effect of making that information not very useful to researchers or to innovators who, for example, might want to create a shopper's tool similar to what the insurance department has created in its health cost website, where you can go and put in the information, who your health carrier is, what kind of procedure you're contemplated, and get the price for that procedure. None of that has happened, which was the intent of the federal regulation, because of the differing format in which it's presented. And Jason will give you some more specific examples of that problem. This bill addresses that problem simply by taking the federal regulation, codifying it verbatim in state law without adding any requirements to it, with the sole difference, which is on bottom of page 4 and the top of page 5 in the bill. And that provision gives the insurance commissioner the authority to promulgate a rule setting one standard format for providing the information, so that all the health carriers will be providing it in the same format, and then it will be usable to researchers, to the insurance department, to consumers. And this is something that, this kind of conclusion and plan is something that came out of some work that the insurance department did over the summer under a federal grant, which was intended to help us improve our healthcare price transparency efforts. And so we were able to hire Manat to come in and advise us. And one of the things we wanted to know is, how can we make use of the new federally required transparency and coverage information? And their answer to us is, well, you can't, because it's the rule doesn't require enough specificity in the way that the information is provided. And they suggested we look to some other states which are have already taken steps to do what this bill does, which is to codify the federal rule and then get more specific about the format in which the data has to be presented. So we've distributed this proposed legislation to the carriers, and we have received just recently some feedback that they're concerned about potential cost to them of changing the format in which this data is provided. So I'd like to ask Jason at this point to speak to these two kind of crucial developments under the federal rule, that the information, why it's not that useful, and why we think it wouldn't be that costly to do what this bill proposes.
Thank you, Alex. For the record, Jason Azes, Director of Health Economics at the Insurance Department. I see almost everybody here knows Alex's name, and despite that, he struggled telling you what his title is. For the record, I call him FDC, former Deputy Commissioner of the Insurance Department. So henceforth, you shall be known as such. Thank you for your time and hearing this important bill. I just wanted to echo Representative Ammons' closing statement about efficiencies and economies, because I think I'm always very sensitive to not incur additional or superimposed costs to our private businesses that perform important services to our citizenry. And I too believe, like he does, that this might make the process of transparency and complying with federal rules actually more efficient. And that weighed heavily on us in the synthesis of this bill that we worked hard on. So I think I don't want anybody to lose sight of that. That's important. With regards to the mechanics of it, there are 3 machine readable files that we've specified in the formatting requirement. The federal rule does the same. Although we see very spurious compliance across the continuum of carriers submitting data, it's not to say that they're non-compliant, it's that they choose different formatting styles, and as a result, it's quite chaotic, heterogeneous, and really of low utility to the users like state regulators and even consumers. It's noteworthy too that the federal rule requires that insurers post on their website a consumer-friendly file for which consumers can, or application for which consumers can go and get price estimates on their own. These machine readable files don't coincide with that intent. Rather, they're more for analysts, people who have the resources, both physical and intellectual resources, to be able to handle large data sets and complex healthcare cost data. And the latter is what this bill aims to improve upon. And the 3 machine readable files are systematically organized like that for the reasons that the representative to my left brought up in Representative McAleer about this variation in prices. So notably, you'll see in-network negotiated rates. For those providers who are in contract with carriers, they'll have a specified rate, and it's listed by procedure code. That's our vernacular for how much did it cost for the procedure that I had. That's an important regulatory tool for us in the insurance department. The second file is out-of-network allowed amounts, which not all providers in our healthcare system are in-network with insurers. So for that purpose, there's merit in understanding how much those services are charged for by out-of-network providers and what the paid amounts are. And then the third file is essentially a prescription drug file. And I don't have to tell anybody on this committee the importance of prescription drug price transparency. And it uses a slightly different but really interesting and effective methodology to get reference data for that information. So we believe that this is really a sensitive approach to improving our important price transparency efforts. And it's a big part of the work that we do. And I thank you for hearing that long-winded story, and I welcome any questions.
Representative Spear. Excuse me. Yeah.
I didn't have my hand up,
No,
but I'll ask a
Representative Burrows.
question.
I'm sorry.
We're easily confused. Thanks for taking my question. I just need clarification of something. On page 2, section 2, do all the in-network provider, are all the in-network provider rates uniform?
No, that's a great question. And that's one of the best utilities of it, to see price variation across a continuum of providers. And there is indeed much. Many of you may know of our New Hampshire Health Cost website. We do much to try to stabilize that price variation by provider and by carrier that we communicate to the citizenry and to purchasers and anybody else interested. And it is indeed quite a task. So price variability is one of the main overarching issues for these, robust price transparency efforts.
Okay, I'm still struggling with this.
Representative Teresa.
Uh, so, my question is that if I have certain insurance, I do get the price that the insurance is going to pay for that service. So, does this bill basically works on getting those prices available to all the public, not the person who is having that insurance? Is my understanding correct?
Both. I mean, the consumer-friendly file is intended, and by federal law, the carrier is required to give you precise cost estimates for a procedure at any given provider that they're in network for. And I'll let Alex say more on that.
Yeah, the intent is both to give the covered person access to information about the price that's been negotiated for the service that that person is contemplating having. And also, for example, large employers might be interested in comparing the negotiated rates from one carrier to another to determine what would be the cost of contracting with this carrier versus this carrier for the same coverage, because it'll vary.
Just to follow up. Yeah.
Further question, may I inquire?
So, I just want to clarify myself that, so the information that you're talking about, cost of procedure paid by the insurance, that's already available to me being, having that, if I have that insurance. What is this going to do additional? Is it saying that that number should be available to everybody, even if that person doesn't have that insurance?
Well, the actual price of that information is not today easily available to you, even as a covered person.
It is.
Further question?
Further questions? No, that before the procedure, when I do get that in the statement that this is how much the insurance is going to cover.
The cost sharing.
The cost, this is the cost from the insurance that is going to cover for that procedure. I do get that in the statement.
Yeah, we're getting crossed up on the distinction between the cost sharing that you get access to that information, how much it'll cost you, the consumer, versus the actual price that gets paid for that service.
Follow up?
Further question?
No, I do get both. I get how much the insurance is going to pay for that service and how much my portion would be. I get both the information for that procedure from the insurance that I have. Is this bill going to, so my question was that information is already coming to me from the insurance that I have, but does this bill say that I should have the information from all the other insurance company also for that procedure? Because that I don't have.
Yeah, you could compare, like, I know I'm going to have this procedure and I'd like to know what it would cost through this coverage versus this other coverage. And you could find that information.
Thank you.
Okay.
Thank you for letting me ask a question. Thank you for presenting the bill. So is it fair to say that this bill is really a specification to the IT department to say you have all this data and here is how it needs to be presented in these files so that we can have AI look at it and solve all of our questions. So is it really the specification part of how to present the data that you already have in a common format and then let AI take over?
Thank you for your thoughtful question. I would probably say let JA and MPH take over. Those are my initials and Morgan Harris's. Not for AI, because I, like many of your colleagues here, are concerned about the ambiguity of that and the uncontrollability and untenability of that. We as regulators often get calls at the insurance department through our consumer services division about patients getting ex post facto after they've had the service. They were unaware of the price that they might pay. So we do much to try to give our citizens a priori information over what the price is. And it turns out, to Representative McAleer's comments, I mean, that's very spurious and cryptic, actually. So the purpose of us specifying this, a narrower, more standard homogeneous format across the continuum of carriers that we regulate is so that we can do a better job in reporting that outward and then also reconciling disparities when we do indeed get consumer complaints, which is often on why they paid this amount when they thought it was going to be another amount. And oftentimes it's an opportunity for education rather than non-compliance on the insurer's part. This can be very challenging at the consumer level to find out what procedure code actually applied to the service someone had. Not, there can be a blood draw for lipids, and there's about 40 different procedure codes just for that. Something so simple from a billing and reimbursement standpoint is actually very complex. And I oftentimes struggle considering the merit of the federal rule requiring that insurers put the consumer-friendly format there, because it's somewhat of a misnomer. Because the number one mistake consumers make is not having the right procedure code, or being able to figure out among the host of procedure codes listed when you type in lipid profile, which one did I have? And it's not fair to providers who do great work, hospitals who provide a lot of services, and carriers who finance it, for all of that enigma to exist. And so to that end, we take our responsibility to communicate these rates in an interpretable way very seriously. So that's a very thoughtful question. I just wanted to, respond in that tongue-in-cheek fashion about ANI, but also make it clear that you have two data analysts working extensively to ensure the fidelity of the outward-facing nature of these important healthcare data. Yeah.
Thank you.
Thank you.
Okay. Who should we start with first today? Let's start with Peter Bragdon. Since you only have concerns.
Thank you, Mr. Chairman, members of the committee. For the record, again, Peter Bragdon, representing Harvard Pilgrim Healthcare, the state's not-for-profit health insurance company. And yes, once again, I didn't put support or oppose. I just put that we do have some concerns, and we do. The intent here is great. In fact, something we support. Transparency. There is a federal program that exists. We already do this. And so the concern we have, and I guess I have to correct the FDC, the former deputy commissioner, who said the department just recently received follow-up from the carriers. End of September, the carriers were sent a draft of this. And October 10th, the carriers responded saying, we're concerned. We got some problems. And then we never heard back from the insurance department. So we have some major concerns. And to say it just recently came up, I think is an understatement. We do support the concept of transparency. We are already doing this. As was noted, there's a federal law that requires these big data files to be submitted. And by the way, this is not something for consumers. Each of these files that is submitted, and there's not three, each of these files that's submitted is, I believe, 3.5 gigabytes in size. So Joe consumer at his laptop with his Notepad app, I can't even read these files. It's just too big for anything that I have. And the carriers, including Harvard Pilgrim, have spent a lot of time, effort, money, and resources putting these files together. And one of the problems we have is the overall testing of it and everything else, because the files are so big, you just can't pull it up in anything normal. But the scale of it, let me say, is that there are three file types that have to be done. One for in-network, one for out-of-network, and one for prescription drug. Okay, that's fine. That sounds like three. That has to be done for every single plan. So in New Hampshire, I looked at the Harvard's transparency site where these files are. For New Hampshire, I counted at least 24 of these plans that we have in New Hampshire for all the different things that we do. And then for each of these files, it consists of, for each of the 24 plans, then there has to be a record for each billing code for every procedure, of which there are thousands. And then the rates we charge for those procedures for that provider, of which there are hundreds. So you have basically a data set that is thousands of records times hundreds of records for providers times only 24 plans for us. I can't imagine how many some of the other carriers have. And you end up with gigantic files. So basically we have 24 files, each of which are about 3.5 gigabytes in size, each of which has to be recreated every month. The one for the out-of-network rates, if I understand it correctly, has to include the prices, every price paid for a procedure within the last, I think, 60 or 90 days to every single provider. These are gigantic. It took us a long time and a lot of effort to create them. And our concern is, and the testimony you heard is correct, for the most part, what's specified here mimics what the federal transparency law requires in terms of what's supposed to be in there. However, the thing that concerns us the most is the piece at the end, I think it's at the end, that basically allows the commissioner to say, okay, this is what the format's going to be. This is not something you can just flip on its side. Now, if the department wants to make something that goes in and looks at these files and takes out the data that it wants, okay, fine. And I understand from the testimony that the federal data specifications were not that exacting, and so people are doing different things. So maybe there's something we can work on there. But I guess to summarize it, we're very concerned. The scope and the scale of this is gigantic. We're a small, regional, not-for-profit health insurance company. A lot of time, effort, and expense has gone into making this to comply with the federal laws. And rather than changing the spec, so we have to have a different format for New Hampshire. Maine's going to want a different format. Mass is going to want a different format. Rhode Island's going to want a different format. And again, every 30 days we have to generate these things. So this is not something simple, and there's got to be a better way. I think that would probably wrap up my comments, and happy to answer any questions you might have.
Thank you very much. Anybody have any questions?
Thank you.
Okay, next up, Paula Rogers from AHIP, who's in opposition to the bill.
Thank you, Mr. Chairman, members of the committee.
Obviously firstborn.
Excuse me. I'm representing AHIP, America's Health Insurance Plans, which is a trade association, and I've heard one of my member companies give forth with great strength. I have confusion because I sort of come to this late. I did not get notice back in October that something was afly, and I sort of took on this present task on January 1st, so I had to do some homework. And what I understood or understand or think I understand is that what is going on is the department's well aware, as many of the plans are, of their obligations at the federal level for both plans and hospitals as well to file immense amounts of data. I think it's under the HITECH Act. And the outcome of that has been somewhat anemic. A lot of confusion. I guess the hospital's filings are sort of less comprehensible than the plan's filings, but they're not easy files to work with. When I first saw the bill, I thought, well, I guess what they're trying to do is have the local plans that filed federally just import that information and give it to the insurance department, which would be pretty monumental in and of itself. But what I understand, and this is the missing piece for me, and I think we could have more discussion with the department to understand it, is that the intention is to look at the federal format and say, well, for state purposes, we need to alter that format in some capacity. So we don't yet know what that would be. It would come through rulemaking. So I think that's a discussion that needs to be had, and plans are ready to have that discussion with the department. And so for the moment, I'm signed up. I sort of in between. I'm more leaning toward direct opposition.
Not
because
this
I don't know.
time. Not this card.
So anyway, so there it is, and I feel sort of totally unequipped to answer any technical questions. But there is a lot of puzzlement. I understand data is important, and it's certainly important for policymakers like you. We have hopes that consumers will use complex data and learn and model their ways to save money and go to the right people. The reality is the consumer uptake on this kind of information is yet to be compelling to them. So we have a lot of work to do. So anyway, I'm willing to, along with my plans, have further discussions. And as I said, I'd be happy to answer any questions, but I certainly have nothing technical to lead.
Representative McAleer.
Thank you. Thank you for taking my question. I guess I don't understand why the states can't do this information in the same format that the federal government. Wouldn't that make it easier for everybody?
Well, the information is available to anybody federally. Any one of you could go and access it if you wanted to. So, and the insurance department can do that. Some states have made sort of efforts, as New Hampshire Insurance Department is doing in good faith, to see how that data up there might have meaning for their constituency. And so the plans or the reporting people, and they need to understand exactly what that is all about, because the department would assure us that there is utility to that data, and we need to understand the format. And it makes us very uncomfortable, and that's why we're opposing the bill in its present form.
Okay. Alex, do you mind coming back?
Thank you.
Let me ask my question, and then you can ask yours. Maybe the same question. I assume it will be. Okay, so the $64,000 question is, what is being reported to the feds that is not helpful or useful, or what are you looking for that you're not getting that's from the feds? And wouldn't it just be easier that whatever they submit to the feds, they submit a copy to you and call this a day?
Well, the main problem is what gets posted and publicly available is not in any uniform format. So it
Okay, let me
becomes,
rephrase my question. What is the wrong with whatever they are sending to the feds, which is different from what the federal government is posting, right? Because the federal government's putting it through its word processor or its cruncher and doing some other funky things with it. So whatever they're sending the same information to you, and then you can take and do whatever you want with it.
That's the underlying intent is to result right where you finish. But the federal government stopped short of exactly specifying the format for carriers to submit them. So they gave two options: submit them in JSON forms, which are internet style JavaScript notation, or HTML files. And in those cases, carriers are to put a directory, essentially a map on how it's nested. As a result of not being very exact or clear on the specification format, across the carriers in our state that we regulate, like you heard Peter, and they were very compliant, but the way that they submitted was for each plan, a separate file for each plan, whereas other carriers have all of the plans that they offer in one file in a very, very complex network. And a third carrier has the file organized in a way that there's hundreds of columns that are really unnecessary. And none of them are nefarious in of themselves. It's just a non-standard format, and taken together, it renders the files not very useful. So when we worked on this, our imagination was to take the reported variables that, as Representative Ammon said, are well specified on each line in the statute, and require them to just submit a CSV file. It's a glorified type of Excel file that has just that information. With regards to the breadth of the content and information for prices, I'll just, in the interest of not challenging Mr. Bragdon, I would just point out to everybody who goes to a supermarket that the average supermarket has about 160 to 180,000 products that are individually priced, and they seem to do a decent enough job keeping track of them. And we as a society seem to think it's pretty important to know what the price of milk, eggs, butter, bread, and cigarettes if you buy them, and I hope you don't. But the point being, we have a price awareness of those things. It's very complex, but there are lots of examples of how that's communicated to the consumer. Why shouldn't healthcare be like this? This is an attempt to make that better.
So, Mr. Chairman, there was something you said that gave me the impression that you're assuming this information gets filed with the federal government, and it doesn't. The federal regulation just tells each carrier to post this information on a website.
Which is
So-
absolutely useless if every carrier is doing something different.
Different, right? Now, now there
You just can't make this up. Can
we
you?
are going to be in conversation
Okay.
with the carriers.
How about we have a statute that says that you will work with the carriers in New Hampshire so that we have a uniform system in New Hampshire without predetermining it at this point, that we want you to try to work to come together to have a uniform methodology.
Yeah, something like what Paula suggested, that how she first understood the bill. It's an interesting idea that we're going to follow up on.
Perfect. Now, Representative Spear. Realizing that the carriers are having a bit of an issue, and realizing we have to get a certain place, and realizing that their outputs are fixed in format, and we'll eventually have an output, the state will eventually have a format that they want, that's a problem in an algorithm. It's not a problem of I have to reformat every piece of information that I have here. It is an algorithm that can turn that thing into the format that we need. So the question I ask is, if we go along with the kind of thing that the chairman was talking about, we could conceivably simplify this a little bit by them providing an algorithm to get us where we wanted to go once you have that decision as to an exact format. We don't have to convert everything that they have. It can be an algorithmic result, an algorithmic solution as Except
opposed
if
to
there's
reformatting.
stuff combined.
I'm sorry.
If there's some things combined. in other
It
words,
doesn't matter. If as long as it's fixed in format, an algorithm can change it.
Yeah, but the algorithm won't know what percentage is difference in between
Every
each model.
provider would have to provide their algorithm, but it's better than converting all
Mm-hmm.
the data. It might be less impactful than trying to convert all that data every single time.
Right, it's essentially what I'm going to call Paula's idea, which is that each plan will import the information and report it to the insurance department using, a crosswalk or an algorithm to give us the information
Right.
we need.
Well, if the federal government is saying that you can do any one of these multiple different formats, okay? And then in New Hampshire, we only have a handful of companies. It would seem to me that now I can imagine we have some differentials because we have some big players and we have some little players. So, and I can only imagine that the way the feds did that is because some lobbyists were in the room that say, well, we can't do it that way, or we need you to do it our way. And so then you got every lobby, everyone wants to do it their own unique way, and knowing full well that the information is now going to be useless to the consumer because they really can't compare. And not that I'm cynical about the legislative process, but sometimes I can see it happening right in front of me. So I guess it would be, yes, it would be in a perfect world that we could get you to take the companies that are in New Hampshire and to all have them agree to do it the same way.
Mhm.
So we don't have that many companies, and
Right.
I mean, I don't see Cigna here right now, but oh, there he is.
It's easier to make our state a perfect world.
It's easier just to say,
We're small.
we would like to see if they're willing to work. Now, I mean, Anthem might say, no, this is coming down from Indiana, and we're going to do it our way. Then maybe we have to do it their way. But they're so big and nasty. but it's something. It would be nice if they could come together and say, okay, let's have one uniform way, and in the long run, that would be actually useful to New Hampshire constituents.
So
Thank-
we're going to be working with the carriers to see what we can come up with.
Perfect. Thank you. I have one more card left. I do? Do I have? I don't. I don't. No, there you go. All right. You really wanted Chris to come up first? Okay. All right. Right. Okay. You can both come up. Come on up, Gonna say the same
The more the
thing.
merrier.
Okay. Well, in Washington, they always have panels. They always have multiple people. They kind of move things along. They're
Kind
more-
of nice.
And then, and they have corporations. You'll see 4 different corporations, and you say, how can any of these 4 have anything they can agree on? But
I've never gotten to testify next to another carrier. What a delight.
I'm overjoyed.
I'm Sabrina Dunlap, Senior Director of Government Relations for Anthem.
Chris Kennedy, Vice President, External Relations for Centene and Better Health Plans.
So I have just a couple of things that have not been said that I just want to flag. So initially, when we saw this bill, we thought it just tracked what the federal government already requires. But then I sent it to our team that handles transparency, and they were like, the concern is around the format of reporting the data, which I had initially missed, which is that line that was pointed out. That is the key difference. And Anthem has seen this play out in Colorado, where it was something similar, where their insurance commissioner said, we will, promulgate rules at another time. And again, I think that bill also largely tracked what was already required under federal law. And as it turns out, it has turned into a situation that is quite difficult to navigate because the state requirements are quite different. It's turning out to be a different process, different formatting. The knowledge of how these files are submitted goes beyond my comprehension, but I do know that it is very complicated. It is a ton of data. I know they're involving IT architects to make those changes at the state level. So I just wanted to point out that when we talk about these things, there is a significant cost to them. So I think it is very important to talk about what is the purpose, what is the use. And we do already turn over a tremendous amount of data, both to the federal government and the state. I mean, all of our rate filing requirements, other data requirements, things around rebates and drug pricing, we turn over a lot of data already. So I just wanted to point out that there is a significant cost every time we're required to do something in a different format. So I just wanted to caution you on that. And one other sort of technical thing, there's a line around requiring prescription drug files that's not currently finalized under federal law. And so our team just pointed out it would be helpful to pause that piece in particular because we actually haven't gotten the rules from the federal government. So that would be super helpful. But I will now turn it over to Chris.
Yeah, and I appreciate not to be redundant. I mean, I came in this afternoon. I actually had no objection to the bill as submitted until I started hearing about it. I will just say, and again, the scope and range of the data, the Herculean effort it takes. Fine, I originally look at it and I say some poor data analyst team that has nothing to do with me is going to have to do that. Poor them. But the only thing I will just offer up is in looking at a lot of the definitions under page 2 and 3. And I have to say, this makes me question the federal requirement to begin with, although that's not my jurisdiction and I don't know what the catalyst for that was. Most of this information, it strikes me, would be completely useless to consumers. Completely useless. Now, I don't know, again, what format the department is going to present it and or aggregate it. Obviously, we'd love to have dialogue there. And let me just say, the department does a tremendous job with respect to the data collection and price transparency, and a tremendous job in working with the carriers towards that objective, which we all want to achieve. But I just think some further dialogue would be useful, just in terms of making sure that we're presenting something that's actually consumable and useful for consumers. It strikes me that a lot of these things, I don't know how many everyone on the panel has health insurance. How many of you care what we pay one provider versus another? It's not reflective of what ultimately you're charged and what your premiums are, what your copays are. It's a lot of the information is nebulous and irrelevant.
I sponsored the original bill that had the insurance department, and the goal was, when we had Tyler doing this, was that you would have different bills. You get the doctor's bill for surgery. You had the doctor's bill, you had the hospital bill, and then you had the anesthesiologist bill. Okay, and they were all separate. And so, how could you compare a procedure? You know, like if I'm going to do a procedure, colonoscopy. How do I compare that from one hospital to another if everyone they didn't all have
Well, what the
same
cost
information?
price is for the service.
Yeah.
Absolutely. But what our fee schedule is with the provider, I mean, I think is less useful data. So anyway, it's all towards, I certainly would look forward to having further conversation with the department on how we could make this consumable. Because I do think, by the way, I think we also do this a lot in our member, it's already available on our websites and our member handbook in what we think is a fairly consumable format for our members. So anyway, I'll leave.
I was remiss and I did not mention the fact that we have talked obviously with the insurance department and appreciate their collaboration on this and will continue to have conversations. But anyway, I wanted to get those concerns on the record. But
Great. And you all work together and figure out a uniform language. Representative Welch has a question?
Yes. Does the, excuse me, the New Hampshire Insurance Department have the power to tell the insurances in New Hampshire, the carriers, that they want they want data in a certain format?
Only if we give it to them.
So it has to be in a
It has to
bill.
be a bill. We have to.
Okay.
But
But you're asking them. So
I ask as a chairman of the committee.
Mhm.
I often ask departments
Mhm.
to fix it without
Right.
legislation.
Exactly.
Okay. And yes, so in this case, we might end up retaining this bill, saying that come September, we would want to know that they've resolved it.
Yeah. Follow up.
Further question be inquired.
Thank you. So just from what I've been hearing, the pushback from the insurance industry talking about, oh, these files are so big and oh my gosh, how are we going to do it? And coming from the computer industry, I find that hilarious actually, but because there is something new out called software engineers who make a living of being able to do this kind of stuff. But it also repeats why this bill is needed because, you know, if it's that dark and deep and complex for you guys, what is it to the average consumer? And how are we going to kind of figure this all out? And that's why the insurance department came in and said, hey, this is deep, dark, and complex. And from all of these different carriers, they don't do it in the same way. Let's try to have one format. So I absolutely agree with this whole concept of making it that way. So that's a would you believe. I'm sorry.
Yes, it is. Okay.
Mr. Chairman, can I just say, and I'm not diminishing at all the effort it takes to replicate these files, but I'm sensitive to your concern, your example there. But I will just say, you know, what my interest chiefly is let's make sure the data is useful. I'd love to work with the department to make sure we're disseminating this information in a way that's actually useful to consumers. I think we've almost learned more about the federal provision just now and the uselessness of it, and let's not replicate that. So I'd love the opportunity to further have that dialogue with the regulator.
Great. Thank you both very much. Having no more cards, we will close the public hearing. So I'm working on my for next week, and since insurance people are in the room, we will Wednesday we will be doing subcommittees on insurance. And then Tuesday, in the morning, we're going to do the liquor. We'll do cannabis and liquor positions Tuesday morning at 10 a.m.
Thanks.
And then in the afternoon, we'll take up 3 business subcommittees. And
So
then
that's
Thursday's session.
Was that Tuesday and Wednesday next week?
It's Tuesday and Wednesday. So Tuesday will be downstairs in room 104. And,
That is small.
and
On Wednesday.
I can give you all a peek of my old office down there.
104?
104.
On Wednesday. Where is that?
Oh, it's first floor. Next to the ladies. Next to the ladies.